Here you can. How you guys doing?
Perfect.
Doing
We
great.
we are well. Echo was just giving everyone a brief synopsis on who he is, how he got started. For those who aren't aware of him, but we know that you're pretty popular on all the social media pages, but we got a ton of people who are jumping on that aren't necessarily on social media and in the circles of information that we're in. So if you could just give a quick overview of who you are, what you do, and that way the people can have an idea of your point of reference as we're talking content today.
Yeah. So, hey, what's up? My name's Quincy. I'm a blockchain developer. I work for the XDC Foundation. Funny enough, I sort of like found my way in blockchain from being if you want to call it a Web 2, a cloud developer. I focus more on AWS systems. I used to work for a private equity firm, and I had a bit of experience in the traditional finance space. Where I actually took a tiny bit of a turn in crypto because crypto was sort of popping back in 2017. Took a turn into it to get a better understanding, try to see if we can move some of our technology over to blockchain to see if we can, mostly around automation and lending and stuff like that. And I ended up becoming really familiar with blockchain technology, mostly around the EVM, getting familiar with Bitcoin, Ethereum, XRP, end up settling on XDC. But as I became sort of very comfortable with the understanding of the technology, I started explaining my experiences with it, just from a developer standpoint. And I ended up going sort of semi-viral in the crypto space, and now I have a YouTube channel, and that's sort of what I do now. I talk about my experiences in crypto. I explain a lot of different concepts that are relatively difficult for the layman to understand, and I try to give a perspective in which people can have a grounded understanding and where the future of technology can go.
Awesome. So great segue into the first topic of discussion that I will present to you, gentlemen, is for those who are new to understanding blockchain, crypto, this new financial frontier that we're really on the cusp of entering into. What would you say the easiest way to explain what the blockchain is, what crypto is, and what it's going to be, and how it's going to play a new role in this system? And that's for either of you, whichever one you would like to take the lead.
Yeah. Actually, I love that question. So, fundamentally speaking, blockchains are just shared databases. That's fundamentally what they are. Now, what's really interesting is with these shared databases is the cryptocurrency. And the cryptocurrency is essentially a form of capital that can be used as a means of payment. And with this, you can essentially obviously move value, but you can also conduct in digital trade. People talk about tokenization, assets, NFTs. You can use this cryptocurrency, this native form of value, as an exchange medium to exchange with other objects on chain or other units of account on chain. So the entire premise of the blockchain is really that shared database that allows you to be able to move capital between a multitude of different parties, in such a manner in which you don't have to go through multiple intermediaries to do so.
Awesome. Anything to add, Echo?
Bro,
What you
he
think,
just killed it. Quincy, you killed it, bro. He got that thing down to a T. Look, I'm gonna put it as basic as possible. It's how I see how the blockchain is just to me it's a new world. It's a new environment for a lot of new folks that are coming into the space. Right? It's gonna seem very overwhelming at first, but I like to think about it like if you think about like old school bartering system back in the days, like the evolution that we're gonna be going into, it's kind of like a digital version of the bartering system back in the days where we used to just barter with like back in the days, like seashells to seashells, gold to silver. I feel like that's how it's going to be later on, right? You don't have to have, a straight dollar to dollar. No, you can have this token swapped over for this token. It's kind of like a digital bartering system, how I see it. I could
Good
be
way.
wrong, but
Good way I'd like to put it. I like the way you put it, but the way I like to put it is traditionally, and this is what we typically see now in the current financial system. You have to go through a multitude of different brokers, a multitude of different banks, a multitude of different payment terminals, a multitude of different intermediaries to be able to conduct in any level of trade. This could be something as simple as being able to make a cash payment, although paying in cash directly is more direct, but making something as a simple payment all the way to buying an asset or conducting in some sort of international trade. The big thing with blockchain is you can conduct that trade peer to peer. People like to emphasize on that peer-to-peer. All of those different mechanisms of trade can be done peer-to-peer rather than having these giant corporate entities facilitate this for you. So sort of like you were saying, in the olden days, you could have sort of just bartered directly with each other, where now you have to go through Visa and your bank account and all this and all this and all this just to be able to conduct a trade, where you can go back to that ability to have that peer-to-peer engagement with other people in regards to how you're able to trade with them.
Absolutely.
Perfect. And see, I'm already loving the way that our synergy is going here, because in now understanding what blockchain is, or given a complete definition or understanding of what blockchain and crypto is, and how it will play a new role in the coming system. Let's backtrack a little bit, Echo, because we had some news that came out today in relation to one of our friendly banks up there in New York had a 40% drop, and there was some trading halted on the exchange. And we also know and understand that this same financial institution is the same one that just acquired Signature when they collapsed. Give us a little bit of insight on that.
I mean, from what I know is that when the earnings came, when the earnings came out, that's when they fell 40%. I haven't really dug too much into it as far as that. I just know that we're on the cusp of a liquidity crisis. That's not a given. It's just like, it's not a question of if, it's a question of when, right? So all of these like catalysts are starting to come down to starting to trickle down, kind of like a domino effect, right? So I thought it was kind of particular that you have other countries that are making their announcement that they're aligning with other alliances, right? They conducted trades outside on cross-border payments and digital currencies, and these banks they're squeezing for liquidity right now. They're tightening for they're drying up so bad, right? And you can see it from just the charts, and it's just I don't want to sound like doom and gloom, but at the same time, I'm kind of like, okay, well, this is kind of like, it needs to happen. These banks need to get liquidated. They need, this, I thought about it this way. We have all these central banks over here in the world, right? Eventually, I feel like it's going to be down to like your top 4 central banks, which are going to be, your custodial, companies eventually in the future. So these banks, I'm not going to be surprised if I see, we see more banks in the future start, quote unquote, collapsing, and they just get absorbed.
So now with Basel 3, just depends on how you want to pronounce it, being in full effect, what's next? Because we understand that banks have been buying gold, precious metals at record paces, and the threshold for the reserves has passed. If I'm remembering correctly, it was Monday, 2 days ago. What does the domino effect of that look like? And just to give you a little bit of an idea of myself, and I apologize, I'm going to backtrack. I had you two share a little bit about yourselves, and I didn't share anything about myself. So that's shame on me, right? I've been in the financial services sector for, what are we in, 24 now? So about a little over 25, just under 26 years. Like you, Echo, I've worked in all realms of banking, been licensed in the financial arena now for over now 16 years. Can be a financial advisor, but I don't advise on crypto because it's not regulated as of yet. So I just want to put that out there for everyone. And we're sharing this information with you from the research, the experience, and things of that nature in regards to our own journey. Love Quincy because he's able to give you a little bit more insight on the technical side of this. But with now Basel III being in effect, the banks had to meet the reserves by this past Monday. We start to see the earnings reports and things of that nature come out, and of course, we see the first bank have a 40% decrease in their stock yield. It had to be frozen, so on and so forth. So we understand to an extent that the banks are hurting for liquidity. Would that be phrased properly?
Yeah. So back to, so also I want to add in, I'm not like the super financial expert, right? Like I understand that we have a liquidity issue. That because whenever you have fractionalized banking and you have it go on for centuries after centuries, actually you really want to be realistic, further back than the Roman days, right? But you have it keep on going on. Eventually, it's eventually going to get caught up. And right now, we're having that liquidity squeeze. I'm not really too sure about Basel III if it really went into place. I know that this past week that we had Evergrande had to liquidate, right, or was ordered to liquidate. And from my research, Evergrande is highly connected with some other individuals, like other crypto projects and stuff like that. Whether or not that's true or not will have to remain to be seen, right? But for me, it's just like, hey, when Basel III does come out, it they're gonna have to liquidate some of these banks don't have enough liquidity, and with the interest rates being as high as they are, they're not getting the liquidity they need inside the financial system. So it's getting they're getting screwed from both ways. So from here on out, to be honest with you, they just need liquidity, right? Whether that come from the blockchain space in digital assets, it remains to be seen. Whether that comes from a revaluation standpoint of currencies, as far as like precious metals, we'll have to see, right? I'm really big into like decoding the U.S. debt clock, because what's one of the things I've always like try to educate people on is how important the debt clock is, and how important debt to income ratio is. Because whenever I started, my financial background was in mortgage banking, and the amount of people that don't know what the definition of debt to income ratio blew my mind, right? So I always felt like, hey, a really good spot to teach people on is, hey, go to the debt clock. But it wasn't until a couple months ago when these little debt clock secret images started popping up, and I started like decoding it. Turns out to be that they're actually telling like history. So a lot of the things I'm getting together right now that I've been trying to figure out has been going back into history, and if we do get this revaluation, because at the same time as some people might say that we have a collapse in the financial system, I'm like, we could, but the other side is like we could have an upgrade. Because I'm like, dude, we're gonna upgrade the system. Like they're gonna plug it in. Like for some reason, I just feel like they're about to like plug us into like from dial up to high speed internet. I would love to hear Quincy's side of that too, for real.
What you thinking, Quincy?
One thing I actually wanted to ask real quick, can you refresh me on Basel 3? I've heard of this before. I haven't heard of it in like a few years now, but can you refresh me on that?
Yeah, absolutely. So the Basel three, in essence, and I'm going to simplify this for a lot of the viewers who aren't as what's the word I want to use there? They're not as acclimated to that banking realm, right? Echo has a little banking background. I have some as well, but essentially, what Basel three is going to do in a nutshell, the banks are going to now be required to have deposits on reserve for their liabilities, right? What we know for a fact, if I'm remembering correctly, I want to say it was at the tail end of Obama's term, heading into Trump's term, but the actual reserve requirements that the banks had were done away with. So the banks were literally lending without having any form of checks and balances, which is why when you see a lot of the information coming out as far as their liabilities, you'll see that a lot of the banks are actually upside down, right? This is where Basel three, like Echo likes to say, in game, right? Basel three is going to require them to have a certain amount of monies now on reserve. And the problem is, in thinking of it from this perspective, Quincy, if you go and deposit, let's say $10,000 in the bank, right? There's nothing that's stopping the bank from lending it out another 5 to 10 times to 5 to 10
Fractional
different people.
reserve, classic.
Fractional reserves, right? Now the problem is that if Echo gets one, I get one, and seven of the other listeners get that same $5,000, $10,000, and we go to cash in on it. Well, guess what? There was only an original $5,000 or $10,000 there to begin with. So this is where when Silicon Valley, when Signature Bank, and all of the banks that domino effect started last fall, the Fed and the government was like, nope, we're fine. The banks are safe, so on and so forth. Because if that momentum would have kept, there would have been a bank run. And ultimately, what we would have found is that there's not enough. Echo, you're going to love this. M2 money out there to meet that demand. Now, on the other side of that, let's look at it. Let's look at it this way as well. We talk about the FDIC insurance, right? And how much money is the FDIC really insuring?
Like
It's a
total
lot.
amount, or is it? Oh yeah, I was about to say. I'm like,
Just throw out a number. I mean, because we're talking, but the key is that people get this and understand this, right?
yeah,
So let's just say they're covering trillions of dollars. Well, last I looked, and again, I'll have to re-update this, and I can put a post out. But last I checked, they only had about a 250 billion in reserves to cover trillions. That's not enough, which means somebody's going to be left out when this system resets, or as we like to say, or some people like to say, everything's going to go to zero, right? So if that is in fact the case, everything goes to zero because what most people aren't understanding, and I know Echo and you, Quincy, as well, understand this better than most. The great transfer of wealth, we hear about it all the time, but most people really don't understand where that's happening. So they hear it. Oh yes, they go, okay. There's going to be the greatest transference of wealth that we've ever experienced in human history. Okay, that's great. Where's that going to occur? How's that going to occur? And how can you get involved in it? Right. So my understanding and listening to you wise gentlemen and other people that are putting out content and taking and putting the pieces together, I understand that the greatest transference of wealth is going to be from the old system to the new system. That's where the transfer is taking place, right? Because look at it in this regards. And this is a great segue. Evergrande. I know that bring a smile to Echo's face, right? Evergrande just came out in the news. Was it yesterday morning? This morning, I'm up late, so my days run together. But if I'm remembering correctly, and correct me if I'm wrong, 300 and was it 382 billion dollars of assets and liabilities that have to be liquidated?
Well, they're going to be defaulting on.
Yeah,
Yeah.
but
Mhm.
the courts ordered them to liquidate.
Yeah,
Right?
yeah. So depend. I don't know how much they're gonna have liquidated at the end of it. They're just gonna default on $300 billion, which, if we look at it at a standpoint of of how much damage that is compared to speaking to past history, uh, Bernie Madoff did $20 billion in damages. So
mm,
this effect right here, and again, it's not hasn't trickled into the market yet, right? It's gonna take time. This is why whenever I was like making the post about it and made drops about it. I was like, hey, you want to know what? It's not going to happen immediately, but over time, it's going to trickle into the market. There's nothing you can do to stop what is happening, right? They're already, they they stopped. They stopped it as long as they could, I feel like, but now it's time to the point where they're kind of like, okay, we got to give up. We got to give the keys over to the new handlers, right? The what they call the guards, right? The old guards to the new guards. So I feel like that they already did that. This is why you're seeing the Federal Reserve pretty much be like, "Hey, you want to know what? They're saying that they're trying to fight inflation, but really they're not really doing much from the back end. I mean, they just pulled the what did you call it, the banking funding loan for
Yeah,
March 11th.
in short, it's a reverse repo.
Yeah,
That's
the
the money
reverse.
they were using,
Yep.
and here's the key with that, and I'm getting ready to spin this into a question for Quincy because I'm very interested to see how he what his thought process on this is. But the reverse repo, they came out and said that the Fed is cutting it March 11th. Now, some of the information I've come across, and some of those who've been doing some digging and really watching this, said that at the rate that they're burning through the money, it was going to be expired by the end of March anyway. So that poses a question now because there's going to be a blame game that comes out of this. The banks are going to blame the Fed. The Fed's going to blame the banks, and so on and so forth. But getting back to what we are just talking about, because it still in essence ties into what we're speaking on. So Quincy, I know you've been doing a lot of shows and coming on and talking about what tokenization looks like, how it looks, so on and so forth.
yeah.
Here's a direct question for you, and it ties into what Echo and I were just talking about. With Evergrande defaulting, and we understand that at some point in the future, everything's going to be tokenized anyway. Why not go ahead and tokenize that 300 billion, whatever it is now, on a blockchain? And what does that look like?
That's so interesting that you asked that because I get that question a lot, and it actually even goes into what is the point of tokenizing and what is the value of even putting something on chain in the first place. So there's two things with that because you may go, oh wow, all these benefits, why would I do it in the first place? First off, yeah, although we're getting into this idea of what it means to be able to tokenize the future of assets and be able to exchange them on chain, the future of tokenization means nothing when there's nobody to be able to exchange them with, and that's sort of the problem right now. I always make this joke about trade finance because with XDC we talk a lot about trade finance. We talk a lot about what that means at scale, but you can't have trade finance with one partner on the network. You know what I mean? You need to have people to be able to engage with. So what you end up seeing is, and don't get me wrong, that doesn't mean nobody's tokenizing anything. That just means that a lot of people that are already operating some aspect of their business aren't even thinking about that because they're able to run their business without having to operate with those technologies. Now, new businesses are coming into the fray, like new startups, blockchain-based businesses, companies that are becoming more familiar and becoming more comfortable with blockchain technology and tokenizing that way. And the number one thing that they're doing is, especially when it comes to why tokenize and why even be able to engage with people, they're taking already established trade partners or business partners they may have and then trying to onboard them as well to be able to engage in this trade on chain. And ideally, it's being able to increase the efficiencies between the trade partners that they may already have. So unless you have somebody that you're willing to already engage with and say, hey you, it cost us this much money to do this process. What if it was potentially cheaper to do this process over here? And you see more and more of that. And it's like a scaling thing too, because are you guys familiar with the Metcalfe effect? The what is it? The network rule. Basically what ends up happening is as each additional party is added to a network, the total amount of connections in that network becomes exponential. So what ends up happening is if you had one person and there's only one other person in the network, there's only two connections. But if you have 5, you may have like 25 connections, and if you have 100, you may have 1,000 connections. But the biggest thing is the more people that are on that network, there's now more people to engage with, and now that there's more people to engage with, that trade volume now becomes that ability to trade that volume of assets is the value of coming onto the chain if you can find someone to trade it with. Otherwise, there's offsetting and costs. There's being able to utilize shared databasing and shared accounting. There are a lot of other things that do offset costs, but at the same time, businesses are like, hey, look, we run a $1 billion business, and it would take X amount of effort to do all of this to maybe cut costs when, we can just do things the way we're already doing. This is why people get into the idea of disrupt. This is like the whole concept of startups and disrupt. It's like, oh, you could do that, but, these previously established organizations aren't going to because they have their businesses. So why don't we create a process that disrupts the traditional mechanism, and then now you start seeing more and more people start opting into that new technology. I think you see crypto in a weird middle ground where you see more of the adventure types, like I said, the startups, the businesses that are definitely more into crypto now, and eventually once you start seeing them establish a good, I guess you'd say, trade networks and trade, like, what's a good way, they can once you start seeing more established economies on chain where people are actively engaging in trade, the value of being able to tokenize and then be able to participate in those economy becomes a lot more apparent than just, oh, let me tokenize $500 million worth of this asset. And I always make the joke, for whom? Like if your trade partner on the other side can't accept it because they're not using crypto, it doesn't really hold so much value to you. But like I said, presuming you are able to utilize that technology and are able to find those trade partners, you may be able to have access to more parties than you otherwise would to begin with, and you may be able to do it at a significantly more efficient level than these traditional organizations. So I hear this all the time where it's like, why don't they just tokenize? Why don't we just see this? Why don't we see that? And we do, but people usually pick to go to the biggest giant already established organization and goes, why aren't they doing this entirely niche esoteric system that's going to completely change the world, And that's almost like saying, why didn't Sears create their online catalog? They would have killed Amazon, but they didn't.
Right.
You know what I mean? Like, so it's exactly like that.
Yeah, and that analogy is a great one because in that same breath, it's why didn't the taxi services just start an app and and there would
Exactly.
be no Uber, there
Exactly.
would be
Like
no Lyft.
it's so
Uh,
easy to say that, but think about how hard they fought them on that. They fought Uber, and Uber just now you see Uber, Lyft, and all these other ones, and now you even self-driving cars. Like it's already passed, man. But it's so easy to say, yeah, guys, can't you do this? And you see everyone else go, well, and it takes someone to come in and actually sort of change the game a little bit.
Yeah, so since you brought up trade finance, and I love that XDC pillow you got back there, man.
Yeah, I got it from Consensus. It's all right.
Let's give a clear picture of what XDC is intended to do, and since we're in the process of talking tokenization, and I'm going to come to you, Echo, because we know the AMM was passed today. Or yeah, we got the consensus vote, which is set to go forth on the 14th of February. But
oh, cool.
With XCC handling trade finance and things of that nature, that we always talk about XRP, we always talk about XLM, we talk about a lot of the other ISO tokens. To me, XDC is one of those hidden giants, because when you start to think numbers in TradeFi, it starts to blow my mind. So in what does that look like with you having been, one of the lead developers on in XDC and getting it to the point of where it is? What does that look like from your perspective as you're going through the process of helping those come on board to XDC, and what challenges is it that you face?
Yeah. So one thing that, and this sort of defines the entire like space that I'm in. There we talk a lot about like trade finance, and we talk a lot about the adoption and the future of crypto and all this and all this and all this. And there are certain ideas that we gravitate to that are relatively obvious, like tokenizing assets and commodities and derivatives and currencies. But there are a bunch of other sort of like cogs in the system that aren't as obvious, but these cogs will basically determine this system being able to engage or being able to operate. And the reason I say that is it's one thing to say trade finance and talk about tokenizing assets and tokenizing trade and all of that, but then there are all these other components in that go unnoticed, like tokenizing documents, tokenizing identities, tokenizing supply chain assets, or whatever it may be. Certain things that aren't necessarily focused on finance or focused on trade specifically, but there are certain tools that allow for the facilitation of these different systems. Like I said, how are you gonna have trade finance if I have no means of being able to identify you? You're gonna need to have some sort of identity mechanism first, and then you're gonna need to be able to have some sort of a reasonable means of being able to recognize what documents are possessed by who. And this could be something as simple as maybe I'm doing a shipment across, maybe let's say I'm doing a shipment between two countries, and there's a certain set of documents on both sides. I need to make sure that I'm able to recognize the documents and recognize who I'm able to engage with before I even get into that level of trade finance, the supply chain or whatever. And there are a lot of those, and they don't get a lot of attention because, well, when we talk about tokenizing identities and tokenizing documents, it's not as sexy as all the money and currency and all the debt and all the commodities and assets and stuff. But they're just as important. And one of the biggest things that, at least in terms of like a challenge that we face on the XCC network, is trying to find these cogs that need to be serviced to be able to facilitate all this engagement that we want to see on chain. It's one thing to say, oh, look, there's this DEX here, and there are these marketplaces that people can put assets in and all of this, but it means nothing if no one's able to recognize some level of identity. It means nothing if no one's able to verify some level of documentation. It means nothing if people aren't able to actually operate in the same way that they would in a traditional system on chain, because these tools aren't provided yet. And people like to talk a lot about like, oh, how do we get more people in crypto? How do we get more of this? How do we get more of that? And that also goes into a set of software tools or a set of tools to allow people to engage in that. One simple example I hear a lot is people have a hard time being able to engage with different smart contracts or different services because of the barriers they have to go through in terms of being able to custody the crypto, create the wallet, all of this stuff. And I even see businesses trying trying to service retail, where they'll even create, whether it's an API or whether it's a service, or they'll sign the transactions for you, and you don't even need to hold crypto. And it's like pivotal service like this, where it's not like someone who's creating an application that's allowing you to interact with blockchain without having to hold crypto is essentially creating a tool that's going to be as as sexy as OpenSea or whatever, but it's a cog that allows for other applications to be able to be accessed, whether it's new smart contracts, whether it's a new set of assets, new set of tokens, whatever it may be. And they're all over the place, whether making it easier for users to interact with apps, making it easier for businesses to be able to recognize each other, whatever that may be. It's sort of like a constant game of sort of like constantly trying to chase what are these cogs that need to be sort of relieved that can allow for all this other innovation to come into play. And I only say this because there are plenty of people in the space that want to say, I want to do this, 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 and this. And it's like, okay, cool. Well, you can sort of do this because the technology will allow it, but there's no real way for us to identify your trade partner over here. So we may need to find, some third-party solution in that regard. And right now, you might be able to utilize this technology in this regard, but there isn't any regulatory clarity in that regard. So you're sort of taking a risk, and maybe you can do this other sort of system. There's so many different barriers in the way to allow for businesses to effectively be able to create products on chain. And that doesn't mean they're not going to create products on chain. What it means is we're focused more on products than we are on protocols to facilitate those products. And that's what these blockchains are. When you look at these smart contracts, these DAOs, these dApps, these DEXs, they're almost operating as protocols. And then as you accumulate all these services together, you can create a product. You see what I mean? And right now, I don't think we have enough protocols to be able to effectively create products that people are easily able to use. So that's what we spend all our time focusing on. How do you make it easier for users to be able to onboard to applications? How do you make it easier for businesses to be able to identify each other? How do you make it easier for developers to be able to build on chain? There's so many different little cogs that need to be facilitated that will allow for the tokenization of currencies and assets and all of that good stuff,
And I'm glad you brought that up. Did you have a question or something you wanted to add, Echo?
No, I completely agree with him, because this is the thing, like we have, from my understanding, right, the blockchains and the distributed ledger technologies are ready, right? It's just now we don't have the applications. We have the lack of developers on the network to actually build what's needed because everybody, everything, the onboarding process or the ability to onboard right now, they pretty much have like some of the outlets, but now it's kind of like building our new world, right? But like Quincy mentioned, once we get over there, we have to have easier applications to actually start building, like massively building the whole entire environment and infrastructure that's going to be built over there. If I'm not mistaken.
No, absolutely.
That's how I'm seeing it.
Yeah, it's and I like what you brought up in terms of the developers. So one thing that it's fun to say, I saw this in cloud, and I see this clear as day in crypto. In cloud, so when I first got into cloud, I was like right in the middle of college, like I was studying up on my like cloud certifications, and I was seeing different people get jobs and sort of like that world sort of like evolve a little bit. And there was a part of me that's like, oh man, like this is sort of the time to get into cloud. If only I was into cloud, like into AWS, Azure, Google Cloud, 2 or 3 years beforehand, because beforehand it was like right before you saw all these freaking startups, Airbnb, Cash App, Uber, whatever, all these startups, and if you got there sort of early in terms of talent, you would have been employed at all these amazing companies right here. And there was a time, and even when I was like working on like my cloud certs and working in cloud, there was a good time where there was a huge shortage of cloud developers, where there were more businesses, more startups, more migrations from legacy systems into the cloud than there was like tangible developers to be able to satisfy that. And that was like, you would obviously see like wages go up, and people are like looking at how crazy the wages are, but the thing is there was a serious like drought or a serious shortage of, and it's not that there weren't enough developers. There are plenty of developers, there just aren't enough developers with experience in cloud in this regard to be able to effectively build these services in this domain. So you may have spent 20 years as a systems engineer, but that doesn't necessarily mean that you're comfortable with all the cloud services. And it's the same thing with blockchain. There are plenty of people that are very much qualified to be able to operate in blockchain, but they're like, I don't know what the EVM is, I don't know what Ethereum, Bitcoin is, or tokenization, or these assets are. I'm not in that space. And there's a shortage of that. There's a shortage of people that could be qualified, and there aren't enough people that are qualified to be able to satisfy a to be able to satisfy an incoming wave of startups, to be able to see this like huge growth of adoption. And not that we're not seeing that, it's that in order to see the adoption of these blockchain networks, these apps, dApps, whatever, you need enough people to be able to get into the industry and start building on them. And it's like, and the reason I say this too, a lot of developers like sort of look at crypto as like a joke, not like in a haha way. It's sort of like what's that thing over there that people seem to be screaming every 18 months about, like, you know. So like, and I only say that because in any other software, in any other domain in software, there's usually like a lot of practices. There's usually a lot of ideas on how you would go about getting into this industry. Crypto's not like that at all. Most people get introduced into crypto because their friend brought crypto, and then they're like, oh, you should buy some too. And that's how they get in, rather than, oh, you know, my company just adopted this new technology stack, and which is funny because that's how I got into crypto. My company has adopted a new technology stack, but typically your company adopts a new technology stack, you adopt that technology, and then boom, that's like your new intro to a lot of new technologies. And it's hard to get new talent into crypto, so we can see that furtherance and adoption, both in startups and in legacy systems migrating into Web3.
So based on what you said, and I want to backtrack just a touch. Laying the foundation, getting all of those integral parts in place, the documents, making sure the business or that entity is set up to even be capable of operating on, whether it's XDC, XLM, XRP, any of these networks. From your perspective, because of course we all see it, and it's starting to become a little more prevalent now because the impatience from the communities, right? They're like, oh my God, it's back to this, it's up to this, we haven't moved, we haven't done this, so on and so forth. How long does it typically take to get a company from start to finish when we're getting them established on pretty much, you know, say any network to be able to trade?
So it depends on what they're trying to do. So what do you mean in terms of like trying to trade? Like they're tokenizing an asset and they want to trade it on chain?
Yeah, so let's say, you know, we understand where things are moving toward. So I have my company. Let's just say I'm a trucking company, and I'm like, you know, hey, look, I understand that this is where things are gravitating to. I'm interested in going ahead and starting the process to get my business situated and the foundation laid, so that when we're ready to run, we can run. What would that process look like for me, so that those who are invested in those ISO tokens, um, the waiting games, so they can have a little bit more clarity and understanding, hey, this isn't just going to happen like this, you know, based on what you just said, I have to do a whole lot of work behind the magic curtain here that you're not understanding. All you're looking at is what's going on in front of you. So what does that look like?
So, oh goodness. So, what does it look like to be able to sort of articulate what it means for businesses to grow on chain, and what that looks like in terms of how regular people see that in terms of the growth of the network?
Yeah, what is that? What is that, and what is usually that average like turnaround time frame for your normal business? Like, say your average size business.
Well, the thing is every business is different. So,
Right.
like a perfect example is a startup made up by a random, you know, handful of software developers at a hackathon could have created a. I literally saw this. Like two guys in New York literally created a payment terminal that operates on XDC the same way Visa did, and they did it in like 6 days, and that's basically now a business, you know. So in terms of like these developers, they were basically able to start a business in like a week, and then basically just start building on top of their technology, trying to get funding, trying to get grants, all that. But like fundamentally, their technology is like their whole premise is you have a card and you can pay crypto at these different payment terminals, or pay different tokens at these payment terminals. Instead of having to sign, you can use the card to sign. So from a startup standpoint, like if they're very deeply ingrained into crypto, they could start right off the bat. Like that's sort of a, but if it's like a traditional business, it depends on the business. So if the business has, so there's two types of concerns. There's regulatory compliance concerns, and then there's like privacy compliance concerns. And these are like entirely like different worlds apart. So usually with the privacy concerns, they'll like start opting into like private networks or something in that regard to be able to manage that, and then they'll start trying to figure out how they can manage those services that they want to use on chain while managing, you know, some sort of private siloed network to be able to manage that PII. Now, in terms of like regulations around whether it's like tokenizations or the status of the cryptocurrencies, some businesses are more ballsy than others. Some businesses will feel so comfortable in doing it, and then like a little bit of news comes out, and they're like, "Nah, I'm out. I'm eject. Push the button. We're out of here. We're gone. Nope, nope, nope." And then other businesses will go, "Okay, how many hoops do we have to jump through to be able to do this one thing?" And a perfect example is there's a little bit of ambiguity around tokenizing. So people will create special purpose vehicles, SPVs, and it's basically like tokenizing a business and then taking whatever process or whatever ownership or whatever and putting it in that business. That's a method to get around some of the legal stuff, and it's not even getting around. It's just going through the most simplest method of remaining compliant, I guess you could say. But there aren't very many methods, and it's risky because like it's not necessarily the most defined way, but it's a way. So some people are more willing to try to go that way and see how that works. I've seen, I don't know if you guys are familiar with Jake Claver. He's working with a business that focuses on tokenizing sports cars, like high value cars, and then being able to recognize the what is it called? It's not the lease, the title, being able to recognize titles through these tokens and stuff. Now, in terms of that, like he just took a business that already had these supercars and already managed these titles and integrated the service into that business. I don't know how long it took him to do that. 6 months, 8 months. Well, I don't know. But like I saw a startup build literally a startup in 6 days. A medium-sized business be able to integrate crypto in 6 months. I've talked to businesses that have been trying to do it for years, but depending on what their needs are, will depend on what it takes to be able to integrate into whatever these technologies use.
So, in essence, progress is progress, whether it's 1 inch or 1 mile.
Well, the way I like to describe it, yes. So here's what I see. No, here's what I see. This is what it's hard to truly get this because now anybody can participate in this. Before only like rich VCs could do this. So imagine being like in 2007 or 2008, the iPhone just came out, right? And let's say there's like a version of me back then going, "Oh my god, guys, oh my god, can you believe the amount of apps that are gonna exist? You're gonna have an app on your phone, you can do all these things that you do on your computer, it's gonna be so sick. Oh my god, can you believe all the things you can do on an app? Oh my god, can you believe?" And then you'll be going, "Okay, what can you do on an app?" Because right now I see a stupid little taser app, I see a little beer drinking app that I can go. I don't see all the big apps. Where's the big apps? And then, it's like, okay, if I were to tell you all of the possible applications that could be successful, maybe at best I could maybe create one of these companies and be successful. But most likely it's just another random idea in the sea of ideas of other people trying to be able to use these technologies to build some sort of service. No one can tell you what the next big thing is unless they're doing the next big thing and they have confidence that it is. And even if they are, there's no guarantee that it is. So it's one of those things where it's like it's really hard to be able to anticipate what's going to be popular, how it's going to be used, what capacity is going to be used, how it's going to grow, how fast it's going to grow. Like if you ask people, like Facebook blew up in like 18 months. Like 18 months ago, Facebook didn't exist. Next 18 months later, social media is now a whole thing. And although it's been sort of a thing, it's not like anybody like before that could have just predicted Facebook or social media or TikTok or any of these things. And I think that's exactly where we are in crypto. But the difference is because everybody can participate, I think there's this angst of like, okay, cool, I'm in it. But the only reason I say this is this angst isn't like new. Like if you were like a VC and you're, dropping 10 million here, 10 million here to a bunch of random startups in the hope that one of them makes you wealthy, it's the same sort of angst. It's just the angst that regular people can now participate in. So instead of being some giant VC putting $100 million into 10 different projects or 10 different startups, you now have like regular people putting like $1,000 into 10 different cryptos and basically hoping and crossing your fingers for the same thing.
Now, for those of you, because we do have some who aren't quite at the level we are. So just to make sure we're all staying on the same page here, as Quincy is relating to a VC, it's a venture capital.
Oh, sorry.
Company. No, you're fine. I'm with you, brother. We got each other's back on here. But you opened the perfect segue, and I got to come back to Echo on this. AMM for the XRPL. I want to touch on this before Echo starts to expound on it, because I'm going to come back and ask you a question as well. But I'm going to preface your question to that I'm going to come back to you on, Quincy, but then I'm going to go to Echo. So I want you to think about this, and I know you already know the answer, but I want Echo to expound on what the AMM is, and this one came directly for you. That as you see me looking down, I got questions coming in for you. What is the AMM? What will it do? and what are the advantages and disadvantages that it will bring to the XRPL? They told me to ask you that one, Echo.
Okay. The pressure's on, right? The pressure's on. So from my understanding, the AMM is also known as automatic market makers. It's a protocol on the XRP ledger, XLS30D, and it'll give the ability to be able to give a automatic market maker, which is again not it's not nothing new, right? They have it on all the other networks too as well. It's just that from my understanding from David Schwartz is that how the federation system was set up is that this is going to be able to create it's not going to have an impermanent loss for liquidity providers because you're only setting up one side of the liquidity pool, right? So it'll be more of a from my understanding, it'll be a little bit more stabilized, right, on the back end because if we're going to be going into a new system, right, a new financial system, and we're going to be able to bring on real world assets and everything else that goes along with it, including TradeFi, derivative markets, and everything, we need to have a stabilized protocol, right, that has, of course, regulations, and it's just coincidental that it's just I found it really coincidental that everything was happening in the banking sector all this past couple weeks, and then as soon as everything, because clawbacks and AMM, they were already in the voting for the validators since I believe October, November, right? So it was just drawn out until the last few days, and the last few days they just approved both of them, not approved of it, but they put it into consensus phase, right? So I'm kind of like, man, does this have something to do with the liquidity of the bank? I don't know, right? That's just me speculating, but it'll give the ability for all of us, um, from us XRP holders, the ability to be able to stake on the actual network, right? What that percentage is, I have no idea on that end. I understand that there is Orchestra Finance that has that tested everything out, right? I have not yet used the Orchestra Finance, but I think if anything from using the liquidity pools over in the other networks, I feel like it's only going to be able to be beneficial, especially when you have a network that basically essentially digital cash, right? That's frictionless, secured, transparent, right? Yeah.
Now, here's where I'm coming back to you, Quincy, because you stated, I think it was a couple of weeks ago, there's two things that make the XRP ledger special. The entire network is the DEX and the algorithm. Now, with the approval of AMM, what's your thoughts? How does that play out for the person that doesn't understand all the tech and the jargon?
This is great. So, okay. So, this is actually, from the average person's perspective, there is one major thing they're going to notice with an AMM on chain, okay? And I noticed this when I first got into XRP. I don't know if anyone's ever done this. If you go in the XRP toolkit, you can go directly on chain and trade directly on chain. Whether it's creating assets or whether it's trading GateHub's assets or whatever, just other assets on chain. The network's insanely illiquid. So if you want to go sell something, now people need to go, wait a second, but if the rippling algorithm is there to maximize liquidity, well, what happens when you divide by zero, all right? When you divide by zero, it's still zero, right? So even if you have the greatest algorithm ever to maximize liquidity to the millionth degree, if there's still zero participants, there's zero. Now here's where the AMM comes into play. The AMM artificially acts as another buyer on the network. Now, that ends up being great because in an environment where let's say there was only an environment where there were only 3 buyers and 3 sellers, right? So there aren't many people that are buying or selling any particular asset, but there are a bunch of assets listed on chain. Well, the AMM will always act as a buyer or as a seller for any particular asset. And usually the idea of the AMM is it's acting more intelligently, and especially with the algorithm, the idea with rippling on network, you could potentially be trading into different assets rather than a liquidity pool between 2 assets and then segmenting into multiple liquidity pools. You can have one pool of capital that can trade into different assets, and that ability to trade into different assets will allow for people that want to trade on chain to have a participant to engage with. Because like I said, if you had the most amazing liquidity algorithm on chain, this is the same joke I make about trade finance. What is trade finance with nobody else to trade with? You could have the greatest algorithm ever and you can go sell an asset. There's no liquidity if there's 0 people there. But the idea is if there's a automated market maker or whatever, there's always somebody on the other end. Now you may go, okay, well, what about the like maximizing liquidity thing? Well, the thing with that is, even if somebody were to buy in a separate currency or something else, they could still engage and trade with you. So that's the whole like maximizing of the, like, I could have XRP and you could have like a US dollar, and I could still make that trade with you without explicitly having like the dollar or whatever asset I was trying to deliberately trade with you. A good way to describe it is, and I think I saw this in the documentation. Let's say I wanted to sell 100. Let's say I wanted to sell 100 XRP. Let's say XRP was worth $1. Keep it simple. But let's say I wanted to get 50% in dollars and 50% in Japanese yen. The liquidity, that algorithm will allow you to do that without there being any extra routers to do that. You see what I mean? So I can sell one asset and I get two different. I was able to liquidate it into two different assets in one transaction, or at least in one foul swoop. That's what that liquidity maximizing algorithm did. You still need somebody on the other end selling, both the dollar and the Japanese yen, just to even trade anything to begin with. You still need someone to sell it, but presuming that there's somebody there, there's a router to maximize that liquidity.
So in essence, as we all know, it will cut out the middleman, right? And it will also, in this case, in the example you gave, it will save you from an additional transaction. So let's say if it using that 100 XRP, what's valued at $1 each, which is $100, I'm going to get $50 in the U.S. currency. I'm going to get $50 in yen or whatever currency we're looking to get. But that also saves me, or will save me, those exchange fees that, once I have that US dollar, now I'm going to have to go and switch my currency out. It's going to save you some money there as well. That is definitely phenomenal.
And it on slippage. You can actually trade into multiple. You can trade into multiple currencies, because, like I said, instead of going dollars, yen, dollars, this, you get XRP into literally anything, and then anything into literally anything else. Like, in theory, if you were really able to maximize, the AMM or maximize your arbitrage strategy, your exit strategy wouldn't be the same as your entrance strategy. It's so strange. Like, imagine making more dollar. Like, you invested $5, but then you made $5.02 in like pesos, because you like profited out in pesos, and then you like take the $5.02 in pesos, and then you profit in Japanese yen. You see what I mean? It's like, oh god, like.
Talk to me, Echo.
It makes sense.
I see the gears running over there.
No. For me, it makes sense, because when we're talking about changing the forex market, right? Because that's one of the biggest things, is that, like Quincy said, we have to have liquidity on the other side. This is where I question, hey, when is the liquidity going to come? How is it going to come? Right? You hear about all these partnerships with with not just with Ripple, right, but with XDC and every all of these networks, right? ISO 222 compliant messaging system. When is everything going to go live, right? This is when the patience is key. Developers are building. I sat into a couple spaces yesterday, right, listening to a couple developers, and then we need that. They need the other side, right? And that's where I'm trying to help. Get people to get the clear understanding, right? Because so many people are, especially when they're coming to the crypto, they're brand new. They're really uncertain, like how secure and how great crypto really can be. But you have everything that happened back in the past few years that scare people out, right? They say, hey, I don't want to, lose my crypto. I don't want to, get my crypto stolen, right? It's all the negative sides of it where they're not talking about the positive sides. Like, holy crap, eventually later on, we're going to be able to have tokenized assets, and you're going to be able to fractionalize that. You're going to be able to lend, borrow, you're going to be able to do all sorts of things, right? And in a decentralized manner. And I think that people look past it, where I'm kind of like, I feel like I'm in two worlds at once, right? I'm in the real world trying to explain to people that have gold and silver, hey, this is how it's going to benefit us in the future, right? So stop looking at everything right now, look at everything in the future, right? Everything that's being built right now is built for the future, right? But you have to think that way, and it's like, I love the way that, Quincy speaks, because I understand everything he's saying, right? It's just, how do I twist it and turn it back to your normal person that works a 9 to 5 that doesn't have time to research and take the risk to understand, because whenever a lot, I'm not gonna lie to you, 99% of people, probably not 99%, probably about 90% of people that get into crypto, right, and get into the digital asset space, they get into it because either a influencer sat there and said, hey, this token's gonna 50x, get in right now, right? And it's like, no, that's not what, in my mind, I'm like, yes, at first, when I first got into crypto, that's what I first, I got into it to make money. But then when I started utilizing the networks, I'm like, dude, this is more than just making money. This is actually, solving problems, right? This is why I'm so passionate about XRP. This is why I'm so passionate about not just XRP, but XDC, XLM. Only reason why I put an XRP hat on my head was because I knew it was a target, right? It has an X on its head. It's a target. And if everybody's going to look at me and they're going to be like, and it being one of the top 10 projects for what, in the past 10 years. So I knew that, hey, it was going to be able to gain that attention. So kind of like a marketing scheme from my end, not scheme, but like a marketing, because I still love XRP, but it's kind of like, hey, I love the project. I want to be able to talk about it. I understand how it could benefit our financial system. Is it going to? I hope so. I damn well hope so. But, only time will tell. But in the meanwhile, at least I can help bridge that. Like, hey, help. Sorry, my puppies. At least I can help bridge that and say, hey, okay, well, everybody knows that we're waking up to the fact that the banks don't have liquidity. Okay, well, what's the solution? Well, here's the solution. Whether or not we go to it, it's up to us, right? I mean, let's be realistic. They're giving us the keys to the castle. It's just, hey, are we going to take the time to actually learn, to actually merge over there? And you have all these people that just sit there and just trade crypto like it's a day job. And I'm like, look, man, there's more to it than that. I wish that people would think of it, not just say, hey, XRP is down 5% today. I'm like, bro, I could care less about XRP being down 5%. I'm worried about, hey, what's being built on it. How are things gonna adapt to these new environments? Because that's the future, right? Again, I'm trying to think more of a future standpoint rather than in the moment standpoint. The only reason why I'm in the moment is because there's a large audience right now, especially surrounded around me when I have. When I'm talking about like gold and silver and, real estate and property, like, they're stuck on that side of things, like the real hard assets where I'm like, okay, well, how are we going to bridge that over? What's the idea? And try to get that spark in their head because they don't know how you won't ever know how a network really works or functions until you start utilizing it, start seeing it and playing with it, right? Because other than that, it's just a token, a crypto that sits in your wallet and it just goes up and down in value. That's all you know. You don't ever explore out. You never see the benefits of it. So, you don't see the magic being happening in the background.
I mean, imagine, like, look at it this way, right? Like, imagine, like, I want to put this in. I want to put this in a way that doesn't come off insulting.
Quincy, just say it. There's no right or wrong way. Just say it.
Well, okay. Imagine if. Imagine if. Oh goodness. Okay, imagine if, right around the time of like the steam engine or even the gas engine, there was a small society of people, right? And they live right next door to this, the colonies, whatever, wherever, Ford was making his engines or whatever. And let's say they had no conceptualization of what oil could do, right? But they knew that if they got the oil, they could either sell it to you or they could hold on to it because they know that you're going to pay more for it later. So imagine in their mind, they're going, okay, I know in the future you're going to need more oil, so I'm going to hold on to it because I'm going to sell it to you because I know you need more of it. But they couldn't quite tell you what they need the oil for because they're not engineers. They're not, like, cars don't exist, right? Whoever's buying the oil from you is creating a new thing that doesn't really have any context for why they would need the oil. And, in this hypothetical situation, these people over here not understanding what the oil would be for, it's just sitting there with all of this oil. And it's just like, and it's funny too because what sucks is, imagine the oil obviously having value, but because of these speculative markets, people are like, you know what, oil's trash. I saw it go to $100 last year, and now it's back at $2. Absolute trash. Meanwhile, like, someone who's building like machines and stuff is like, I need the oil, man. Like, and the more machines that we buy, the more oil we're gonna need. And presumably, if the economy was able to run off oil would be probably one of the most in-demand commodities that there is. But at the same time, if you never knew that you needed to use oil to run a machine, you'd just be sitting here going, well, oil is just an investment vehicle. It is just an investment to allow me to make money off of somebody in the future wanting it based off of, and that's it. Like, that's the end of the story. And I only use the oil example because it's easy to understand what oil is used for. And in crypto, it's actually funny. In all the documentation for most networks, the native cryptocurrencies usually reference that as fuel, because you need that fuel to be able to engage with different activity on chain. And it's exactly like that. As there's more activity on chain, more fuel is demanded, whether it's in the form of capital to be able to exchange in these assets, whether it's in the form of gas fees to be able to make executions on chain. It sounds small, but gas fees turn into micropayments to smart contracts, and those micropayments to smart contracts become revenue generating apps, and those revenue generating apps become the new startups of the future, and that's the thing. The more of those you get, the more value is attributed to the network because of the activity that's on the network. But it's hard to conceptualize that if you're, like I said, just some random person with a little cup of oil, and all you know is I'm buying the oil from you, and I'm willing to pay more and more and more, and even some people over there are willing to pay even more and more and more because they think I want to pay more and more and more. And now you just have this activity of basically people selling the idea of how much they believe somebody else would want something, rather than articulating why someone would want
And
it.
I got a question here as you guys are speaking, and it's a little bit of a turn, but I think it still kind of ties in even here to what we're talking about, because we heard, I believe it was Jamie Dimon said, crypto is a fraud. If it were him, he'd do away with it, so on and so forth, and this and that. All the while behind the scenes, they're buying tons of it, right? They're saying, it's been put out, that it's being used for illegal purposes, child trafficking, all of these other things. But on the other side of that, we're hearing the buzzwords, and I think this is where a lot of people who aren't as plugged in as we are kind of let it, or dismiss it, or let it, pass by them. But they come back and say blockchain is here to stay. Crypto's being used for illegal and illicit acts, but blockchain is here to stay. So,
I mean, like
the question
the argument
could it be? Oh, go ahead. I'm sorry.
I was gonna say I think what people end up missing, especially when they associate things. One, I think a lot of those are just like talking points from people, like from talking heads in the media that know they'll get certain they'll get coverage. Like, what's it? Kevin O'Leary's a classic one. He'll just say anything at any point to get any amount of attention. But what I end up seeing is there's certain ideas that people latch onto, and it's one of those things where it's an inevitable element of the internet. That's almost like saying we can't have social media because some people out there may potentially be sharing pictures of things that shouldn't be shared. Insert whatever image you want to put there. But the thing is just because somebody could do something with that doesn't mean that's the only thing that technology can do at all. It's funny actually, before the internet, the amount of money fraud I'm willing to, wire fraud was probably a lot lower, simply based on the fact that most wire fraud's done online, emails and stuff. Think about it, it's like, oh my god, wire fraud's gonna go through the roof with the internet. It's like, well, yeah, I guess, but it's only because that's just an activity that you could have done before, and now you're just using the internet to do that same activity. It's not unique to the wire fraud that the internet exists. Maybe before they did it on the phone, now they do it on an email. Same. It's not anything unique to that. But I feel like we feel like certain ideas are they're sort of pounced on in a sense to, I don't even want to say dissuade legitimacy. I think what ends up happening is it's easier to see that point than it is to see that activity can exist regardless of the technology. It's oh goodness. And I only say this because this isn't new to blockchain. This is every technology to ever exist. I think a good example of this in the 90s was what is it called? Music rights. That's what it was in music rights. Because before it was like, oh my god, with the internet, everyone's just gonna steal music. That's all it is. That's what the internet's for. It's stealing music. You see how many people that stole all those people, Napster and all that? And it's like, yeah, sure, someone could do that, but that doesn't change the fact that there are people out there with like cassettes, like burning cassettes and, you know, selling it. Just because they can do it at scale now doesn't mean that the internet's just for, you know, pirating music or whatever. And I think what ends up happening is just like the music example and just like the examples people throw out now, those are just the things people see immediately. So like let's say for example with the music example, let's say someone can see that you can download music on the internet and let's see people are stealing it, but then you're like, wait a second. That same mechanism that allows people to download music on the internet, you could download games on the internet, you could download movies on the internet, not steal them, but that same tool that's used to steal music could be used to, you know, broadcast a bunch of other services. And if it was packaged just right, you'd love it as a service, wouldn't you? So I think a lot of it just comes down to the certain things that people see immediately in front of them, and then being able to contextualize their understanding around that, rather than really going into what this software can be used for as a whole. And like I said, if you only saw people burning discs and using Napster to pirate music on the internet, then that would be the only thing you would have thought the internet was for. You'd been like, well, all I know is that my grandson pirates videos off the internet or whatever on the internet. And obviously, and it's a very narrow-sighted view, but every single thing is like this. Like when something new is created, it's hard to see what it could be used for, so everyone always sees it as the one thing. Like I remember, this is so funny. This is like the big joke in crypto. Whenever people bring out like the videos of like the first iPhone, there are literally people on the news going, "You need to have an iPod and a phone." How stupid. Just pick up the phone and call your friend. What's the point, man? You know, it's like, you know what I mean? Like we always have a narrow perspective on things whenever something new is introduced. So I think this is just the continuance of that, or the modern rendition of that.
So when we hear, or should I say, let me pose it this way, Echo, when people hear those negative connotations, right? But we know what's coming forward because they've all come out and said blockchain is here to stay. Of course, Rosie Rios, the train has left the station. For those who don't know, she's the treasurer, the last treasurer whose name is on the $100 bill. She's also on the board of Ripple XRP. But what buzzwords, Echo, when people are watching mainstream media, when they're talking about crypto or blockchain, what buzzwords should they really be listening for outside of the jargon that is in essence trying to scare people away from it?
I mean, to be honest with you, I don't even notice it because I block out all the FUD. You know, when you're in the space, especially when you're and you're an influential person that, you know, is inside the space, you know, you tend to just look away from the FUD, right? I don't pay too much attention to the mainstream media, to be honest with you. I noticed that, you know, Jamie Dimon does come out and state that, hey, you know, Bitcoin is used for illicit activity. Whether that's true or not, it remains to be seen. I have my suspicion that it does, but, you know, I'm not going to go out there and just blast it all over. I'm just like, okay, you want to know what? If it happens, it happens. But for the most part, you know, the technology that we're going into, just like Quincy said, right? You know, we're going from how I see it, is dial up to high speed internet in a very fast pace. You know, some people don't like the term when I say, you know, the quantum technology, but quantum technology is not nothing new, right? It's just again, an upgrade into the technology that we have right now, right? It's just, you know, on a higher intellectual level where it's much more secured than what we have right now. On a base level, you know, I feel like that people sometimes kind of got to just do the opposite, right? You know, if you have fear in the market, you know, if you're sitting on the sideline trying to, you know, and you're deciding whether or not to buy, you know, you buy during the red, you know, and you want to be a trader, then you sell during the green, right? You know, I'm not much of a trader, but for the most part, if you want to think about it in a trader standpoint, that's how you would do it. But again, you know, if you just pay, you know, if you ignore all the FUD, ignore the mainstream media, but pay attention to what's going on in the background, you're always going to be ahead, right? Real world assets that they're talking about it right now. Jamie Dimon talking about real world assets. You know, what's the name? BlackRock is talking about real world assets and stuff. But that's stuff that we already knew a few years ago, right? One of the very first videos I've ever heard about, or I've ever heard, was from Quincy when he's talking about real world assets a few years ago. So you're able to stay ahead of the game, right? And in order to FUD, then you're always going to be ahead, right? And that's how I see it. Like when you mentioned, hey, how do what's keywords? It's not really keywords, just where we're at in a timeline, right? Because I already know how. I feel like I already know how this is going to end, right? Because you can't stop what is coming, right? As much as some people say that that's like a terminology or a phrase that's being used a lot, but you really can't. I mean, you've suppressed technology for so long that eventually, whenever it lifts, it's just going to go haywire, right? And I'm not saying that as being a bad thing. It's actually going to benefit our whole entire global society. But as long as people like be open-minded to it and not be, hey, it's bad, it's used for this, it's used for that. Well, why don't you think on the opposite side of things instead of being on the negative side? But then you have, again, right, you just have those people that are just so adamant that, hey, I don't want digital technology. I don't want, this is where the whole my conspiracy, my tinfoil hat comes on, right? And I'm like, look, the mainstream media has been not just poisoned, but the movies, right? Hollywood has forced us to think like, hey, Terminator, right? That like whenever technology gets so advanced, it's going to be like iRobot, and I'm like, bro, that's what they want you to think that's going to happen, but in real reality, technology has done nothing but benefit us over time. I've never thought like right now, yes, you're going to unfortunately have some people that lost their lives during the time of progression of evolution, but overall society, human and technology are like human and dog. They work hand in hand together. I don't know. That's how I see it, and I'm like, hey, look, just ignore the FUD, ignore what's going on, right? If you're too emotional to be in the space, then you got to get out. Not get out, but just you got to check your emotions. And one of the best times to do it, especially, it's definitely during the bear market. This is why, sadly to say, I'm kind of happy that XRP, XDC, XLM, all of us have been, in my opinion, the price has been pretty much suppressed back because you weed out all those people that couldn't handle it, right? All those people that are like, hey, well, I'm going to rush on over to this other project that's going to 10x, but in reality, they jump in at the very top of the market when they could have just bought and just held. I mean, just like Quincy said, you have this oil that's going to be used later on. I feel like I know what this oil is going to be used for, right? And let's keep in mind, I don't have just only XRP, right? I have my variety of assets are all across the board, including precious metals and real estate, right? So it's not just saying, hey, I do love XRP because I like the solution that it's trying to solve, right? Because fractionalized banking is something that I'm very passionate about to fix, or not to fix, but like I feel like, hey, it'd be one of the core infrastructures to fix so that we can bring on everything else. Because in my opinion, if you can fix the money, you can fix the world.
So I'm glad you both brought that up. So AI, and I got a AI question here that just popped up in relation to as you guys are were sharing that information. What role will AI play? Now, we understand it's here to stay, but everyone's not comfortable with AI.
I gotta sum up AI. I'll sum up AI in like 10 seconds. People seem to have this whole this idea of AI being way more than it is. I remember when AI was machine learning, and it would basically like guess the next step in a progression, and if it was right, you were like, yay, and if it was wrong, you were like, stupid AI. And that's really what a lot of AI is. It's really, it is. Now, don't get me wrong, like, and the reason I say this is at maybe at like a higher level, there are so many different things going on that it seems like it, like, because people seem to treat AI like it's a person. Okay, so they go, oh, AI now, therefore, and then they think of all these things people would do. And really, what AI is going to do is, like, you can look at statistics like a relatively dull blade. Now, in reference to any other type of object, it's still sharp. AI will mega sharpen statistics to a degree that makes predictive analysis scary. That's what AI is really going to be focused on. Anything that has to do with predictive modeling, predictive analysis, statistics, because that's really what that is at the end of the day. You're just going to see a very, very, very sharp edge on statistics. That's what like 90% of AI is going to look like. The other elements where people seem to be more focused on, whether it's like ChatGPT or language models or even self-driving cars and robots and stuff, I think that's less of an AI like issue and more of a how does that change culture and how we interact with the world, like people losing their jobs and different means of how people feeling more comfortable with whether it's different robots or whatever it may be. But what it's not is, oh goodness, AI is going to do all the things humans do, and it's like sort of, but in the same way that computers do all the things humans do, like, but I say that because it's really just like it's like boosting statistics, really. So anything that has to do with statistics, you're going to see AI just get very scary at it, get really good at being able to make predictions off of that. But that's really what it is. It's like 80 to 90% of AI. The rest of AI that I would say that most people are focused on, but maybe not get enough credit, is what it looks like. What it looks like to be able to use intelligent services at scale, like self-driving cars. I don't know, maybe even marketing and what that looks like to be able to pitch information to people, and maybe the social media algorithms being able to feed content. That's the thing you should be worried about AI. What if the AI... So here's an idea. This is what you should... Everyone gets so scared of AI. This is what you should be so scared of. What if an AI knows you so well and is able to feed you content so well that is able to create an addiction in you? Regardless of what it is. No, if it's social media, you'll be addicted to social media. If it's whatever it is, because the AI is interfacing with the person, and the whole premise of the AI is to justify itself by getting you to interface more. So the real scary part of AI is what type of addictions are going to be created based off AI getting too good and working in these invisible algorithms. That's the scary part.
Then you open the door to the metaverse with that. Because think about this and what you just said. We already know there's algorithms out there now that's feeding us content on whether you click it, whether you don't, whether you read it, you sit too long on it, whatever the case may be. The algorithm is picking all of that up. So it's learning you, it's feeding you, and all those things. And I agree with you 100% wholeheartedly. The big fear is that it learns you so well that it can literally put you in a state of bondage to where it's keeping you so occupied and feeding you what it is that you're wanting and perceiving you're needing, but really it's just wasting your time. But as we go into the metaverse, of course, I'm pretty sure there's going to be some element of AI tied into that. So wouldn't that same I don't want to say fear, but wouldn't that same logic apply there to where people can potentially get trapped in the metaverse with AI, or what's your thoughts on that?
So yeah, here's a perfect example. This has been a thing in games for a long time, and it's like generative worlds. But not just generative worlds, intricate worlds with intricate people in them. People like to talk about No Man's Sky? No Man's Sky, Star Citizen. These are supposed to be like generative worlds, and that's great. But the worlds are fundamentally empty. So AI can essentially not only create a generative universe where each universe is unique, but it's full of interesting characters, interesting people. And that goes into that whole problem again. What happens when you get these metaverses that need to justify themselves by getting you into the metaverse and never getting you to leave? And I don't say that as in like this, oh, they're trying to get to you in your brain, or no, it's they make money by you interacting with this product. So this product needs to do everything it can to get you to continuously use this product. And if it's an AI interfacing with you and it gets too good at it, you may never really want to leave, or at the very least, you may be exhibiting certain behaviors that would otherwise be looked at, whether within mental illness or mental illness or whatever. So you may start exhibiting behaviors that otherwise wouldn't have been considered natural if it weren't for the AI. And like an example of that could be, what if you do? Here's an example. This is scary. What if you have a generated world with generated people, and the people are so interesting that people feel more connected to these AI than they do like regular people? It's not that the AI is gonna get the AI is an interface. So like you're almost falling in love with the perfect interface, and it's one of those things where it's like that's freaky because, well, one, that's not even the real freaky part. The real freaky part is when you start questioning, is this an AI interface or is this another person? And then you can't tell the difference. Like, that's going to be the weird part. And that's not even the real weird part. The real weird part is people using AI to run agendas to be able to, like, just like people use catfishing to get, imagine using an AI to pretend to be somebody else to catfish people to get them locked into some idea. Like, that's really freaky. But that's not an AI problem. That's just people utilizing things that already exist to a higher level of efficiency, Like, it's not like video games aren't trying to make you addicted to the video game. It's just like they don't have a tool in the game that is constantly generating novelty to keep you in the game. Games try this all the time. At the very least, they'll try to create so much content in the game that it feels like it's endless. But to truly have an endless game could potentially create the perfect system where no one ever wants to leave because it's so great, and that could potentially cause the problems that you've sort of articulated.
Very interesting. What are you thinking over there, Echo?
Hey man, I'm thinking Ready Player One. That's all I'm thinking.
It's funny you said that because as Quincy was expounding on that, that's the movie that popped in my head. So for those of you who aren't aware of what the metaverse is, and may the clearest example that I can give to you without you actually going or partaking in any of the goggles or anything along those lines, watch Ready Player One. And it actually kind of tied back to a question which I was going to pose to both of you, and it's this: in understanding how Ready Player One, how it laid out, and understanding also how things will continue to unfold with blockchain technology, and the advancement of AI. Will we be in a situation where we really won't have to leave our homes? We already know that a lot of the corporations have started buying up land in the different metaverses, Sandbox, so on and so forth. We know that that land is already being bought by the stores, so and they're already prepping for the full on reveal of those metaverses. Now, in Ready Player One, he ordered everything in the metaverse. It was shipped through the real world. He received it, applied it, did what he was going to do, and he jumped right back in the metaverse. So is that something that we're potentially looking at here within the next 5-10 years? That exact type of scenario, or will there be some tweaks to it?
I'd argue we're already in that scenario. We just don't look at lower resolution metaverses as metaverses. So you could look at most social medias like Facebook, TikTok, Twitter. These can be text metaverses or video metaverses like YouTube. And I only say this because one of the defining characteristics that I see in a metaverse is the thing that makes up the metaverse isn't the content itself, but it's the people generating the content in the metaverse. Whether it's experiences, whether it's what, doesn't really matter. And I only say this because in every context of a metaverse, you're almost in this massive online multiplayer experience. Now the reason I say that is it's easy to sort of acknowledge like the goggles and everything, but what are you having when you get to that experience? Because I say this because I spend a lot of time in VR, dude. Too much time in VR. And when you start asking yourself, what are people actually spending their time in these metaverses? They're doing basically everything else that we do online. Most of the time, either chatting, hanging out with friends, playing video games, talking about drama, politics. But they're doing it in a three-dimensional space rather than doing it on Twitter or doing it on YouTube. Or there are different metas for how this is. Now, I say this because it's one thing to say, oh, well, look. It's one thing to say, oh, well, maybe that's not quite a metaverse because, I don't put goggles on. But the real question is, well, what makes the metaverse the metaverse? Is it the goggles or is it like the actual meta elements of it? Like, do you actually need to put the goggles on to be in the metaverse? Because it's one of those things where I'm like, I guess it's one of those things where I'm like, what engagement do you need to have online? What minimum engagement do you need to have online to be considered a metaverse experience? And I almost see that as any engagement where you're able to engage with other people in a way that would replace the in-person engagement. Typically, whether it's phone calls, all the way up to social media, all the way up to anything. But the reason I say this is we all know this. We spend more times on our phones than anything else. You can literally go on your phone now and look at your watch time and see how much time you spend on your phone. It's one thing to say like, oh, look at all these people spending this time in the metaverse, but then you look at your watch time on your phone, you got 12 hours of screen time. It's like, I mean, who's really in the metaverse? We all say go touch grass, go to the real world. We mean go outside, not okay, guys. Don't worry, I'm gonna go. Hold on. I'm gonna go touch grass, guys. All right. Ooh. Yeah, time to get out of the metaverse, right? Ooh, man. Done with metaverse for the day. That was some hard metaversing. It's like I don't really think it's exactly like that. I think we're constantly in these we're in a multitude of metaverses and a multitude of different resolutions. And I think the 3D spaces one is interesting because it takes the place of like physical space. But I think the online space has taken the online space has been a replacement for the physical space for way longer than a tangible physical space has ever even dreamed of. And I only say this because, okay, here's an idea. I say this because I'm a perfect example of someone who's deep in the metaverse. I'm a programmer who's also a social media person who also deals with a ton of people online, just like in instances like this where we're able to chat. And I start realizing that the majority of my engagements with other human beings almost becomes entirely online. If I haven't just spoken to anyone in my own family or my fiance, I probably haven't spoken to anybody that hasn't been directly over the internet. Now, it's easy to say if I had goggles on, oh, dude, get out of the metaverse. But, for me, I don't need to put the goggles on to realize that that level of human connection is still not there, regardless of the level of resolution I may have in terms of being able to connect with them. It's still the same, at least in my book. So I think we're in that metaverse. Like I said, you can go on DoorDash now. Like, it's not even like before you could call them up and say, hey, I'd like to order a pizza. Now you don't have to talk to anybody. Now they'll deliver it to the door and then notify you that they're at the door and you don't have to talk to them. Like, talk about metaverse experiences. Like, I know that my food's at the door and you delivered it and all this stuff and I never even have to talk to you. Like, we're already there. Now, if you want to say someone adds an additional service or feature that allows for DoorDash in a virtual space, I don't think that's going to create a new defining experience, although it makes it a lot more apparent that you're spending too much time indoors. But I think it's just one of those things where we've all been moving towards sort of this online like culture, online life, and I think that's really the meta in the metaverse. But now we're starting to see like tangible ideas around it. But it's not even just that too. Like people talk about digital currencies, digital assets, these are all metaverse concepts that we don't associate to the things that we like. Whether you have in-game items, that could be considered in-game property or whatever, or you have cryptocurrency, that could be considered online currency. All of these are components of what you would call metaverse. I just don't think we look at them in the same way that, like I said, the goggles would be. But the thing is I think they're exactly the same, and maybe the blend between the two becomes, I don't know, blurred. But yeah, I think we've been in it. I think ever since the iPhone, we've probably been in it.
That is an amazing breakdown because it ties into what popped in my head is, and I don't like to really use the word condition, but I guess we can use it or it's applicable in this case, is to where things are being eased in such a way to where it becomes normal and we're not really even recognizing that, or most people aren't even recognizing that they're in the metaverse, likened unto I was sharing with someone the other day and they're like, what's an NFT? What's this? What's that? And I'm like, well, here's the best example that I can give to you that will turn the light bulb on. Where do you buy your concert tickets, sporting events tickets, so on and so forth? And they're like, Ticketmaster. And I'm like, okay, do they send you a ticket? Do they physically mail you a ticket? They're like, no. They just send me this little QR code on my phone and so on and so forth. And I said, that's an NFT. Whether you recognize it or not, it's a digital asset that's on your phone. It's your property. And that is your way when you go to the gate for that person to scan it and say, yes, this is the owner of that ticket. We've been, and how long has Ticketmaster been doing that now? So, we've been, I guess you can say in an unfolding pattern, so to speak, where we've been slowly integrated into the full onslaught of what's coming, and most don't even realize that they're using or owning digital assets. Would you say that would be an accurate synopsis of that?
Yeah, actually, I'd say. Like, I have, if you look at my Twitter right now, it's hilarious. I have a joke that says Web 2 NFTs. And yeah, the way that traditional databases use accounting would very much fall into the category of NFTs, outside of the fact that they aren't transferable because it's in a private accounting system. But that's essentially what it is. It's instead of being in a private accounting system, it's in a public accounting system. And it's just a unit of account that can be tracked in terms of keeping track of a bunch of goods or units of account or whatever. Yeah, so it very much is a NFT, if you like to put it, just because, but I think part of it just comes down to too. I think there are a lot of preconceived ideas around a lot of the terminology in crypto. So because no one ever called it an NFT before, it creates this idea of like, oh my goodness. And before you would have just said it was a row in a database, which arguably is kind of what an NFT is. But yeah, no, it's exactly the same thing outside of the localization of the unit of account.
Awesome. Echo, coming back to you. So you said you kind of figured out the timeline. We're going to take about a good 2 giant steps back for a second because you were speaking on timelines, right? You said you almost kind of figured it out based on your research with gematria and of course all the riddles and things of that nature coming out, U.S. debt clock, so on and so forth. And I am a frequent visitor of the U.S. debt clock as well, because there's a ton of information that has been updated, and most people really don't even know the U.S. debt clock even exists. From a timeline perspective and your understanding of where you perceive we are, and we're not holding you to any dates, right? Where do you think we are in the unfolding of this transition?
I feel like that we're at the very not I wouldn't say we're at the very beginning, but we're being introduced to this world, right? We're about to everything is about to be revealed, right? To help people get a clear understanding of why we need this transition, because you have 8 billion people in this world, right? And you have to wake them up very fast because it is you have to do it in a manner that doesn't freak everybody out, but at the same time it's like it being a smooth transition. This is where the pointing the fingers at banks are right now pointing the fingers at each other, with the implementation of Basel III coming out, right? You have JP Morgan and all those other banks looking to file suit against the Federal Reserves. And I'm over here like, well, that tells you where we're at the timeline, because now they're pointing fingers at each other. Who's wrong and who's right, whose fault was it, right? So that tells me that we're towards the end of at least that era, and we're going into the new era. Based on the information from the U.S. debt clock, we're supposed to be going into Treasury dollars, right? Or it looked like that we're going to they've already introduced or have samples and information regarding the new Treasury dollar that we go into, and we're going to be leaving the M2 money and going into Treasury notes that are backed by backed by assets, right? The asset-based currency. This is something that we haven't been on since ending the gold standard back in '71. But this is going to be a basket of assets, right? This is where the idea of real world assets come in from blockchain, because we're not going to be going backwards when it comes to technology. Everything that's about to be shown be revealed, in my opinion, is because we were able to track, trace, and expose and explain to people in a manner that, hey, you can't fake this stuff. This stuff it's legitimized. It's been out for decades now. It's just now we're showing you the proof, and the proof is in the pudding. So now it's up to you all if y'all are going to make that leap or not. I hope that y'all make that leap, because the world is going to be feeling empty if y'all don't, right? But for the most part, as far as the time frame wise, I mean, how much longer can the banks survive, with no liquidity and how they are right now? This is the side of me. It's like I don't like to talk about the negative sides of things because it can be dark on that side. But you do have to prepare yourself, right? This is why I use that my slogan, know what you hold, and people think it's just it's XRP. No, man, you have to know what you hold. You have to know, hey, do you know what you hold? Do you know really what gold is? Do you really know what silver is if you hold that? Do you know what copper is? You know what XRP? Do you know what XDC? Do you know what you actually hold in your brain, that pineal gland that you have? Have you tapped into that yet, right? To actually see what's actually out there, right? Because a lot of people are stuck in this two-dimensional world where, bro, there's a whole other side of things that haven't even been explored. The only reason why you haven't taken the leap is because, man, you've been shielded. You've been indoctrinated into this society that makes you see that, hey, you're only stuck in this world where there's this endless area that you can legitimately, you have to take a risk, right? If you ever do decide to take a risk, right? And you have faith in yourself, and you put work into yourself, right? That you can actually do it, right? And I broke it out of my shell, right? I'm still learning as I go, but for the most part, you can't stop what is coming. This thing is not gonna decelerate, right? And I think that's part of me is kind of like, was everything to do with the lawsuit and everything, was it purposely planned just to slow everything down? Which makes sense to me because when I'm on that side of things, when I'm over here like using technology, I think about like, okay, well, if I'm able to speed up the transaction of money instantaneously from 3 to 5 seconds versus 2 to 5 days, you imagine how fast the world is going to move. Like people aren't ready for that. That's why I'm like, bro, you think about the negatives of it, but the positive of it is that you're going to be able to grow the GDP in an exponential rate. This is where the upgrade side comes in. I try to explain to people like, hey, man, the U.S. debt clock, yes, that's $34 trillion, and it's a lot of money. But instead of thinking of it as a negative, hey, what is the solution? Well, the solution, let's upgrade this damn thing. Let's go ahead and do it.
So, and it's great you touched on that, because in just gathering the pieces of the puzzle, so to speak, and understanding that, and it's exactly what you touched on. And for us peer to peer, we can move money like to each other, Zelle, Cash App, whatever that may, we can do that amongst each other. But for those listening who are more on the beginner side of things, what he's relating to is the financial institution side, the actual time frame it takes to settle. And it gets even much more complicated when you start talking about the DTCC side of things, because that's where there's where quadrillions of dollars annually are processed in the derivatives market. So in my head, and let me know if you guys are kind of thinking along these lines as well. We hear that flip the switch moment, so on and so forth, but in order for things to truly function the way that we have an understanding that they should, once this new system is rolled out, everybody's going to, for the most part, have to be ready. And I just have a hunch or an unction that it's going to have to start with the derivatives market, because that's where everything is ultimately bundled anyway. So once that flip is switched for XRP, it's going to have to be flipped for XLM. It's going to have to be flipped for XTC, HBAR, and so on down the line with all of those foundational tokens, because it's going to start at the top and work its way down. So when the flip is switched, I honestly myself don't believe it's just going to be for XRP. It has to be for all the compliant tokens as a whole. And that's where a lot of people get frustrated, because they're looking for, my XRP bag the moon, or my XDC bag the moon, or my XLM bag the moon. But it reverts back to exactly what Quincy stated. It takes time to get all that stuff behind the curtain done. And just from the approximations and the range he gave, from 6 weeks to 8 months, just for one entity, how many entities are out there? Yeah, we know it's been some time that it's being worked on, but we're talking about a very slow, elongated process. And once everyone's ready and fully set to go, then we can flip the switch, because it's not just going to start with an XRP, because XRP, whatever is going to be an XRP, is going to have to at some point talk to XLM, XDC, so on and so forth down the line. So when we're talking a flip the switch moment, it's not just relating to one currency. I believe it's relating to all of them that are compliant. What do you guys think?
Yeah, I think there's an idea where in an environment where there's a bit of regulatory clarity and people feel comfortable to be able to list their assets on chain, I think the idea of flip the switch is just sort of the idea that there are more assets that it can be tokenized than most of us can recognize, and there'll be a progressive not just movement, but the thing is just as easy it is for someone to create like an NFT or some stupid meme coin, it's just as easy it is for someone to tokenize a treasury or tokenize a stock. It's that easy, literally. That's why you see so much crap. It's that easy. So there's this idea of, well, in the perfect, most optimal environment where you can have the most clarity and the most willing participants, and maybe even a little bit of the saturation of the technology, and plenty of talent to be able to certify that. The means for a lot of these organizations to be able to tokenize their assets would be incredibly simple, and the total amount of assets, or the total amount of tokens, or the total amount of units of account that can be shared on chain is let's call it uncalculable. Not that it's not calculable, but it's like you would need to audit every single organization on the face of the planet to basically like go through what assets can be tokenized and what assets can't, as well as assets that don't even exist yet that can be tokenized, like certain credits that may not exist in this way, or certain third or Web3 applications that may utilize tokens in a certain way. There's a whole another set of tokens that may not even exist yet. But the thing is in this well-regulated, highly saturated environment, it'd be very easily for people to be able to tokenize. And with that, you end up seeing a lot more trade volume on chain because of how easy and because of all these different assets being tokenized.
That brought some clarity. That definitely brought some clarity in how things are going to well, they're already unfolding. We all three know that, but it brings clarity as to what that process looks like inside the mind of Quincy. You know what I mean? Because it's like, okay, we can see, the partnerships, we can see this, we can see that, but understanding what goes on behind that curtain, so to speak, is to me very important, because those are the lost intangibles that the normal investor doesn't really think about. When we make that investment, or we buy into a project, we're thinking we know it's going to do this, so on and so forth. And then with a lot of the things that I've been seeing here over the last week is, I sold some of my bag. It's just taking too long. I do have a forever bag, so on and so forth. But knowing how long it truly takes from a time perspective in order to get all of these organizations, institutions, venture capitals, whoever, set up and on board and in place to really do that, it takes some time. So for me, it's slow down. It's just like Echo said, know what you hold. And in knowing what you hold, it's going to take some digging. It's going to take some research. It's going to take some time for you to really invest in yourself. And what you'll begin to learn is that, some of these projects you'll actually get a conviction on, whether it's crypto, whether it's stocks, whatever it may be. The more you learn about it, there may be one or two that just grabs you and it holds on to you. And you're like, I don't care what happens. I'm not letting this bag go, because I know for a fact what they're going to do. And if everything goes the right way, I'm going to be okay. So touching on that, Echo, from your experience and understanding when you got into crypto and things of that nature. Question is, outside of the white paper and things of that nature for projects, where else do you locate some of your information when you're doing research on projects?
So
that's for both of you, but they pointed at Echo, but Quincy, you can jump in as well.
So I was gonna say, for me, so reading a white paper is almost like reading the back of a book, like a summary, and going, okay, I felt real good about that book. It's good enough information to give you a basis of what's about to go on, but it doesn't really explain any of that basis. So going through the documentation is great. Obviously, it's like more technical than not, but you can at least spend some time at the very least, Googling any terminology you don't know, but getting a fundamental understanding of what aspects of the network do what. And maybe, just maybe, if you go look online, you might be able to find people that are utilizing these services to do a subset of different things. I say this because some of the documentations could be 10 pages long or 10,000 pages long. So there's a lot to go in there. But for any technology that you genuinely feel very comfortable with, just take, and that's the thing, you don't have to look at all the technical docs. You could very much just look at a lot of the summaries in those technical docs. They'll summarize the summary, but it'll give you a better understanding of what the technology can do, and they're being updated all the time. That's another thing to remember. So yeah, I know with XRP summaries on how these things work. And there's a lot of information, like too much information. So that's usually the go-to. And I say that because, like I said, the white paper is all right, but it's usually like a summary. Like imagine like reading the Bitcoin white paper, and then that automatically gives you like an understanding of what cryptography. It's like, yeah, sure, you understand Bitcoin a little bit, but there's so much that goes under, and that doesn't mean you have to read everything. But the more you read, the more you'll understand. So that's a good place to start.
Yeah, I use I say the white paper is a really good starting point. But then getting involved with using the network, utilizing the application, the D apps, getting involved with the community, right? If it's something that you're passionate about, you want to learn more about, get involved. If they have a, majority of applications and D apps, they have, NFT projects and stuff, get into the community, become part of their space, right? And because I've always found that was the key component, right? Nothing is built without a community. Unless you have a community, nothing's going to be built. I mean, you could have a multi-billion-dollar company, but you ain't got no user face, you ain't got nobody backing it up. It doesn't matter how much money you got going flowing through that thing. Ain't nobody going to use it. So if I could sit here and say anything as far as like giving somebody advice to, if you're new looking into projects, right? Not only just look at the white paper, but getting involved with the community. This is why I really love X so much, because you have this space where you can actually look at get involved right on the spot with people, right? There's so much information on X that people oversee and overlook, where you could base a lot of a project future performance just by looking on X, right? Of course, you want to look more further into depth, into detail, like go into the GitHubs, ever need to go dabble into that side of things, right? But key component as far as like getting the project, if you're new, is just definitely do your research.
Yeah, and I wholeheartedly agree. I mean, the white paper is definitely a great place to start. And also here on X, there's a plethora of information that comes forth. My adage directly is, trust but verify. It's like, okay, this person's releasing this, they're saying this, that's great, but let me do a little bit of digging into it to validate that, so that so that I can make an informed decision, as far as whether I'm wanting to go in that direction or not, or so that I have a little bit more clarity on what this project is doing, what it's not doing, what those partnerships are, what truly are those partnerships, if we can get to the source of what that partnership truly is, and what those roles are going to be, for those projects, and then making an educated and enlightened decision from there. Someone is asking you, Echo, for, with your background in banking and mortgage, what is your take on the present state of the housing market in the U.S.?
Oh, it's not good. I mean, I wish you know, it was bound to happen, right? The housing market's been on a bull run for multiple years, and everybody thinks, just like crypto, the housing market was just gonna continue to go up and up and up and doesn't stop. And I'm like, everything has to retest, right? Retest support, and I don't know how far it's gonna go down, but this thing has been artificially, in my opinion, it's been artificially inflated for multiple years. You can thank, the wonderful people that are in charge of the national debt for that, right? But as on the positive side of things, that once everything does fully correct, right, in my opinion, when we transition over, it's going to be a lot different, because again, we're gonna, everything that's happening right now, that's going to be, if we go to zero, it'll be transitioned over, it'll be meant, hopefully it'll be transitioned over into blockchain, so that we don't have to deal with all this corruption, all this crap that we're dealing with right now. Because being in a mortgage background, one of the reasons why I stepped away was because of the efficacy that they don't have back there. I mean, they'll sell a reverse mortgage to your grandma without even second guessing it, and your grandma would just sign it, right? And they're just that cold hearted, and it's kind of like, they don't have the efficacy side of things, and it leads us to where we are right now, with the current housing market, commercial real estate, and everything. I mean, the whole entire financial infrastructure is pretty much on the last leg. And I want to sit here and say it's going to get better, but we're everything was bound to happen. How it is, and I'm not. I'm not trying to be fearful per se, because I know people are like, you can be, you can get two sides of Echo. You can either get the fear mongering side or you get the hopium side. Which one do you want? You want the XRPs going to $1,000 Echo? Do you want the, hey, everything could have crashed and burned Echo? And kind of like, I try to be in the middle of everything, but I try to think of everything as the optimism side. If anything, I've talked to several people that's in the real estate market, that old colleagues of mine, and they, real estate applications at the lowest it's ever been. Right, it's actually going lower than 2008 levels. So if that tells you where we're at right now on the financial side of things, right? So, yeah, yeah.
So here's the follow up to that is what happens first, stock markets or banks?
How about both?
Okay, you got to expound on that. You got to expound on that.
The reason why is because I'm looking back in history. Every single time the banks were to have a bank run or fail, it's because of the stock. Right? It simultaneously happened in the stock market too. You can go look back in time in 1910, right before the Federal Reserve was created. That had the stock market crash. Then you had the banking crisis, right? This is where they came, or liquidity crisis is why they came in with the Federal Reserve, right? Then you had everything that happened in 1929, right? Then you can go on townward to basically almost every single cycle after that. This cycle that I think we're going into is just a 100-year cycle. If anybody's ever read Ray Dalio, Changing World Order, this is what we're doing. Like, we're literally at the ending of the current, financial system that we're in, and we're going into a new financial system. This is going to be completely driven off of blockchain technology, right? Web3, Web5, whatever web that we go into is going to be completely much more advanced than we think of right now. And I think that people think that people are uncertain and unsure because it's something new. But I try to give people a kind of sense of at ease, like, hey, I know it's new, right? But I'm going to tell you right now, it is actually, it's actually pretty beautiful in my opinion. It's hard to explain what I know without, it's like you're trying to teach somebody, you're trying to tell somebody like how great things can be on the other end, but until they actually go and use it and to actually see it, right? You can talk all you want, but you can drag a horse to water, but you can't make him drink it, kind of ordeal, and that's how I'm seeing it. Like, yeah,
I'm glad you actually opened up the door to the next segue with that I was going to ask of Quincy, and that's the Internet of Value, Web3. Most people don't even know anything about Web3 or that Web3 is coming, but what will be the biggest impact for the users that are presently using the present web into Web3, and what will the benefit of that be for them?
So you're going to see benefits from Web3 sort of similar in how you saw benefits from cloud. And I say this because cloud came and went with basically no excitement, even though the whole world changed. The whole internet changed, and most people never noticed. I always say, like, an example of this is not Airbnb works, but Uber. An example, and this is gonna get to the Web3 thing, but it's invisible, so I need to explain the invisible first so you can see it. With Uber, without cloud, Uber would essentially need to set up all the different infrastructure they would need. The data centers, set up all the employees to manage these different data centers in these different regions, all the different buildings, all this administration. And in order for them to scale worldwide, it would be almost impossible. But with cloud, they could essentially utilize a cloud infrastructure, replicate that cloud infrastructure into multiple regions, and then be able to spin up and launch basically in any city anywhere in the world overnight. Cloud was able to facilitate that in such a way to where now certain services otherwise would have had to have built out giant administrations, giant corporations just to facilitate the infrastructure to run their business, like Uber, and a bunch of other, like Airbnb, any real like major mobile application in the past like 10 years, right? And this wouldn't have been possible if it wasn't for, like I said, wasn't for cloud. Now, what's interesting about this is we got a whole bunch of different services with this. We started getting, at first, it was just being able to save information online and not lose it. But then we started getting streaming, and then we started getting, like, even now that we have streaming, on demand video, gaming, we started getting all these different things because of the infrastructure that cloud's able to provide, to the point now that we take it for granted. But the majority of the different services that you're seeing provided in these Web 2 applications are coming straight from the cloud, because only the cloud has the means for you to be able to build those services, scale them, and then deploy them into like a user base or a product very, very quickly. Now, with crypto, this is what I end up seeing, and it's a bit invisible. So when you talk about tokenization, talk about smart contracts, talk about automated finance, trade, dexes, all these things, these are very like highly esoteric financial constructs, right? And most of these are really just tools that can be utilized within these businesses to make their business more efficient. So from the average user standpoint, you're going to see a lot of services that weren't possible before from businesses that use these technologies, similar to how you saw services from cloud that weren't possible before because of cloud. Now, the generic example with Web3 and crypto is overnight payments, instant payments, payments on the weekends, stuff like that. You know, settlements of different assets, whatever it may be, whatever sort of long time you needed to wait for something to settle would probably be a lot quicker. But it's even more than that, because now this is something where I feel like it's almost invisible. But let's say you were a business and you wanted to create a SaaS product. Well, being able to create that SaaS product on chain will allow you to have more interconnectivity with other applications and other participants and other trade partners on chain than a traditional application may be. So you may end up seeing new services be able to create new, and I say SaaS products because currently that's like building an API and then shipping it into a API marketplace, Amazon Marketplace, Google Marketplace. But the average person is going to go, huh, what? But someone that's like running a business may go, oh, I understand these features, these services, I use these APIs, and now you're telling me that I can have access to different services on chain, similar to how I can have access to a SaaS product through an API, and that new SaaS product can have a means of monetizing and have a cheaper means of operating without them having to run any of their hosting or operation costs. This is something that's great for the banker, broker, similar in the same way that being able to replicate your cloud infrastructure for a developer would be great in cloud. But from the regular person's perspective, you'll start seeing services that, like, a good example of that. So let's say a service is able to operate on chain. Well, you can consolidate 5 or 6 different blockchain, smart contracts and turn that into one product. And that's sort of similar to taking multiple APIs and then creating an interface for it and then people interact with it. People can do the same thing when it comes to smart contracts as well. So the thing that tangibly makes the biggest difference for the average person comes down to the speed of settlements and payments and the services that utilize that. Everything else just comes down to what it means to be able to build those services that people like to use. Like, I could sit here and go into file management services in cloud and online streaming in cloud, but the average person's not going to really care about that. All you're going to care about is, oh, I'm watching a live stream right now. Why is it glitching? Why is it glitching? You don't give a crap about all the technology that allows that to be the case. And that's what you're going to feel when it comes to payments. You're going to go, oh, this payment's fast. Why is it taking, instead of taking, few days, why is it taking more than 5 seconds? This is taking too long. Like, you see what I mean? Like that's what the average experience is going to be with a lot of these services or a lot of these businesses that utilize these technologies. And those are just the ones I can pull off the top of my head. There are probably a bunch of other third-party web services or whatever that are more consumer-based or maybe whatever that I may not be considering. But the biggest thing is it's going to provide a lot of abstract services that can be encapsulated or that's a better word. That can be utilized by these businesses to provide these services to you. So they can use the technology in whatever way that makes it a more efficient business, and then you just get this better service. But it's not like you're going, oh, it's because they went to the cloud. It's because they're in AWS. It's that we're seeing this stream right now because they went to AWS. That's not what's going to happen with cloud. That's not what's going to happen with crypto. You know what I mean?
Absolutely. So in both of your understandings as to where we are, metaverse is here, NFTs are here. We're already using them in essence, real world based on what we discovered. Everyone's always saying the target date is 2030, right? Everything should be moving at a pretty good scale by 2030. What What does that world look like in comparison to where we are now? And what you just touched on, Quincy, we know like patience is going to be like this, that.
Like,
Right, because
so
everybody's gonna used to be things moving like now. So like, where's my money? You should have had that to me 2 seconds ago. It don't take that long, right? So what does that world look like once everything is fully operational? And what should people expect and do in order to best prepare themselves for any type of transition?
So this almost goes this. So this is the what do I do about smartphones before apps exist, or what do I do about apps before smartphones exist? That's sort of what this is. Because and the reason I say that is it could be today, it could be tomorrow, it could be the day after tomorrow. Someone could create the iPhone, and now we're in an entirely new paradigm in which the way we looked at the internet is entirely different. The day before the iPhone was invented, everyone thought you go on the internet with your computer. The day after the iPhone was invented, every single smartphone under the freaking sun was now created, and now all these new applications now exist. I think that's exactly where we're in with crypto. We don't have the Apple of crypto. We don't have the Microsoft of crypto. We don't have a paradigm shifting application, company, organization, whatever, that allows it to be easy for businesses, people, whatever, to be able to utilize these technologies. And I don't think it's going to be the same way Apple was the Apple or Facebook was the Facebook. To be honest, actually, it's probably very uninspiring, but the Apple of crypto might end up being like some VC firm. It might be like BlackRock or something. Like, it sounds stupid to say that, but the reason I say that is, well, whoever is able to tokenize and onboard the most assets onto any chain basically wins the game and becomes trillionaires. Like, so it's basically gonna be a VC of some sort. Like, but the thing is, and the only reason I say that is it's not that they're doing the tokenization, is that they built a whole subset of services that people can use, in which they're able to, tokenize and use these assets and use these services, and it's merging the gap between the current experience with these different blockchain technologies, all the way down from the retail perspective, all the way up to like business people and developers, and making it streamlined to where it, like I said, even with Apple created a streamlined way to build apps. Literally, Xcode, Swift, all that. They built a streamlined way. Before that, if you wanted to build an app, you would have to, like, and not even that, because they were like the flip phones, and each flip phone had its own like games and software and all that. There was no standard way to do that, and I don't think this is a standard way to do tokenization or a standard way to do a lot of things in crypto. And I think someone, or at the very least, a set of services need to come by to be able to allow people to easily integrate into these technologies. Whether, like I said, whether it's streamlining the development process, whether it's streamlining the users' engagement process, or maybe it's businesses, peer-to-peer business, or business-to-business engagements. But right now, every single person is basically trying to create the iPhone. That's what's happening. Everyone's over-engineering problems that don't necessarily like actually solve any solutions. They just are going into how great their problem solver is, and that's great. Even if it works, that's great. But if it's not standardized, then how are you going to get massive adoption outside of an individual company hoarding their freaking IP and then being like, no, we got the advantage. Don't you dare try. It doesn't quite help. And don't get me wrong, that's presuming that it's either not open source, or they're not, scaling it or expanding their business in any way, or at least in a way that other people can share. And I only say this because right now everyone's just running around with like chickens with their heads cut off. And the question's not even how do I make this easier. It's almost like, how do I do this? And like, that's the thing. Like if the question is how do I do this, that means no one knows how to do it yet. You see? Mm-hmm. And because of that, everyone's going to be trying to figure out what's the best way to tokenize, what's the best way to run the map, what's the best way to, like, we're past that. Like, if someone wants to say, I want to build a mobile application, no one has to sit there and speculate to their brains. How could somebody possibly build a mobile application? And that's the thing, like, if it was back in 2007, then that would be the question. It'd be, okay, like, what type of apps could exist? And then you'd be toiling your brain now. What would be the future of apps be in 10 years? And obviously, like, once Facebook and, Facebook is around, but once a bunch of these other social media companies popped up, it became a lot more flushed out. And then you saw your copycats and your posers or whatever. But the thing is the idea became flushed out enough to where people felt comfortable to be able to engage. And there are enough technologies for people to engage with to where, like, instead of having to build a whole phone from scratch to be able to interact with an app, there was already a tool set out there for you to be able to launch your app into a device, And I don't think there's anything analogous for crypto. And I don't know what that would be. That's the annoying part. People go, what would that be? I'm sorry, if I had the answer, I'd be a billionaire. So don't play this game of, what would that be? If anybody had the answer, they would just be a billionaire and they would just do the thing. So it's almost like playing this like mental algebra for what would be the best possible solution to be able to satisfy all the other solutions. Like,
what you think, Echo?
I
What
think
what will that look like when everything's unfolded full throttle? What will that world look like? And from your perspective, what does that look like for a person making that transition from now to then?
I'm gonna be a little bit more imaginative, right, and visionary. But I feel like that by 2030, right, everything's going to be completely different. Not completely different, but we're still on that onboarding phase. But it's going to be a lot different than what we're faced with right now, because a lot of this, a lot of the veils and the suppression is going to be lifted as far as the information. I'm not talking about I'm not talking about like financial wise, but like as far as like information that we've been suppressed to for so long, because I feel like that we have been suppressed with all the information. And once you're able to let the information just freely flow and let human take its natural course and let them make the decision on their own, you're going to see creativity blossom. And this is where the possibility of what I'm hoping that that we're going to have a lot of these ideas of like developers coming onto these projects. And you like Quincy said, we don't know which project's going to be that apple, right? That apple could come out of nowhere, right? There's still projects that are brand new that they literally could be at the number one spot. Just because I have XRP doesn't mean I know it's going to be 100% going to be on the other side. It could still fail, right? But at the end of the day, I'm willing to take that risk, right? Because I have confidence in it, right? Same thing with Quincy as well with XTC. For the most part, in my opinion, 2030, we all want change. Everybody does. Like, there's not one person in the world right now that I know that's like, unless you're a multi-billionaire that's just chilling on your yacht, you want change in the world, but you want change for not just for you, but for humanity. And how did that change happen? Well, you got to unfortunately go down to the deep rabbit holes and, seek out who actually really controls the money. This is where, I put my neck on a line. I literally put my neck on the line on social media, talking about certain things that, other people are not willing to talk about. Right. But, the willingness I'm willing to take. Right. But at the end of the day, it's almost like a calling for me, because, hey, we have this time frame of, hey, if we are going to try to transition, everything over to this 2030 time frame, then, hey, man, let's make this as beautiful as possible. Right, let's unveil everything and try to make this as great as possible. And I don't want to sit here and talk about those agendas that they have, but for the most part, as far as like, I look up to somebody like Elon Musk, where he's sitting here saying like by 2050 our lives are going to be completely different than what it is right now. I completely agree with that one. So again, I'm trying to look more at like a futuristic side of things, but short term wise, I mean, we know that real world tokenization is going to be brought onto the blockchain. Just like Quincy said, how fast? The first one, the ones that have the most are going to be the first trillionaires. So, this is where we hear individuals like David Schwartz and other developers stating that when real world assets start onboarding, it's going to be a flood of money coming in, because they're going to race. They're going to race to see who gets there first. So I just say buckle up, enjoy the show.
Enjoy now, on your way to then, right? So yeah. I came across him, and I'll have to tag him and give him credit in some aspect, but I came across him on TikTok. And what he was saying was, who's the final boss that like a game, who's the final boss that we have to beat, or that has to be defeated in order for things to really begin to move a lot faster. And what he did a little bit of digging was into who owned BlackRock, right? And what he found or uncovered was Merrill Lynch owns about 46% of BlackRock. But who owns Merrill Lynch? Bank of America, right? So we already know, Bank of America's on record that says, once all this is over, they're gonna go live, so on and so forth. Um, but at the same time, over the last couple of days, BlackRock's been accumulating a ton of Bitcoin. So um, I'm going to have a little bit of fun with this one, guys. So we hear the Bitcoin maxis say XRP is going to zero, right? And then we hear the XRP community, they clap back. Bitcoin's going to zero, and not only is Bitcoin going to zero, it's going to ultimately end up on the XRP ledger and take those. Now you can go kick rocks. Where does the I understand, from their perspective, they got in Bitcoin early, they've made some money, so on and so forth, right? The Bitcoin ETF just launched. We're hearing about an ETF, hearing about an XRP ETF potentially. Where do we as a whole, right? Regardless of whether it's whatever of the 20,000+ cryptos that are out there. At what point do we really come together and say, listen, we all are on the right train. There's no need for us to fight or bicker or so on and so forth. You did well with Bitcoin, congratulations, right? You're going to do well in your project too. Go ahead, Quincy. I'm with you.
Want to know what this is? All right, so that's not possible. I mean, sort of, maybe. But here's what's happening. No, here's what's happening. So this isn't the best analogy, but this is the best I can get to articulate this idea. So the idea is the people that are cheering the hardest are not the people that are playing the game. So it's almost like you have the fans basically trying to tell the other fans they suck. Well, you have let's say the players, like football players. The players, the performance is going to determine how well it does, you can scream all you want, and that's the thing, people may go, well, we've always been the best. Okay, cool, I guess. That doesn't change the fact that it doesn't change the fact we might always be there, but it's a constant running game. It's not even like seasons. Every day is a season. You know what I mean? Every day is a season in crypto. But the thing is, and the reason I say that is, the people that are going to really determine what technologies get adopted are the businesses, the developers, the banks. And I only say this because they're the ones who are going to need the technology the most. Unless you truly believe there are more Bitcoin people. If you truly, this is how crypto people see it. There will be more Bitcoin people to defeat the lesser XRP people. So if there's 1 million Bitcoin people and only 900,999 XRP people, Bitcoin will win. And it's just that's kind of what it looks like when people talk about these different technologies winning over the other, because that's what it turns into. Look at how many more people bought this. Look how many more people bought that. Look how many more people put this. And I'm like, yeah, but that doesn't that doesn't compare to let's say 20, 30, 100 different organizations conducting in millions of dollars in trade solely based on the fact that this technology allows them to do so in the most efficient manner. They're not just going to go, well, I see that Bitcoin has this many people, therefore I do. They're almost agnostic to it, to the point to where they don't care. When I first got into crypto, my VC firm, or my PE firm, did not give a flying crap. They didn't even want to touch crypto because of the volatility, but they wanted to use the technology. And that was my first intro to crypto. So most of these guys do not care, do not think about it. They don't even want the volatility. They do not care if whatever it is they could use it to make their business more efficient. That's what they're going to use it for. So when you have people that are going, oh, our technology is going to beat your technology, well, you guys aren't the ones using the technology to make that decision, are you? It's almost a macro decision made by people that chose to use this software versus another software. Why do you think Linux is one of the biggest software ever used, ever? Because people just decided to use it. It's not like people are like, well, you see that, Microsoft has a freaking, monopoly on the market, so we're all just gonna go to Microsoft because that's what we're gonna. No, they're just like, well, it's the software we're gonna use. So we're going to do this for. We can use this software for this, we can use this software for that. It's not like we're ideologically bought into the ideas of what software is going to win out. You're just going to use it for your business. And I think that's what's happening with crypto, where you have these fandoms, these cheerleaders, I typically like to say, barking at each other on the sideline. And then normally it'd be super advanced, or not advanced, but super intense, two football teams smashing into each other. Oh, I'm going to win. But really it's more like a bunch of nerds going, actually, I see on this network, I can actually utilize this efficiency to a higher degree. Let me move over here. Actually, I might want to be able to conduct with my trade partners on this network because I see that there's more liquidity. actually, it seems that there is more value on this network. I sort of misjudged that. And like that's how they're like looking at it. They don't give a crap about the network. They don't give a crap about the token. They don't give a crap. They're just like, I might be able to use this software to conduct this business or this solution or this whatever. And how do I do that best? And I will move. And like there are developers that are loyal to crypto. Most of them are very bought in to the tokens that they're loyal to. But the biggest thing is the majority of the people that are coming into crypto don't care. They hold no crypto. They have no buy-in. They're just like, I have a business that does X. How do I run X with a higher level of efficiency? And that's the thing that I think is really funny, that the people that are playing the game will determine the winners, but the people that are screaming on the sidelines think that the louder they scream, the more likely they'll win.
Very great, gentlemen. I do appreciate your time this evening. And first, Quincy, I want to please share with your fiance. Thank you for thank them for allowing you to be shared with us for the amount of time that you have. And same with you, Echo. Tell your son I said I'm gonna give him a big dap, man, when I see him next time. And I appreciate him lending you to us as well, just to have a chat. I have one more question, gentlemen. We'll wrap it up. Still got a ton of questions coming through, so if you both are open to getting together at a later date, we can definitely do it.
Oh, for sure.
Here's this question. We got the ETH conference coming up, and I just to make note, I would love to be a fly on the wall, but you're going to be there, Quincy, I think, and if I'm remembering correctly, I think Dave is going to be there as well, David Schwartz. I'd love to be a fly on the wall with both of you in the same room, because I love how both of your logics are expressed, and even as you see, I usually think with my eyes closed. So but it's just so many things that are flowing through the head and the mind. But I find it really ironic at this point or juncture where we are. Not saying that it's never happened before, but we have two of what I consider you and David at the ETH conference in the same building and essentially in the same room. What do you think comes out of that ETH conference?
So this is actually really cool. So ETH Denver is the biggest developer conference of the year. Usually the biggest conference in general is Consensus, but it's a lot more like business, investor, very general focus, where ETH Denver is mostly developer focused. Usually the biggest things you see come out of it are a bunch of hackathons and a bunch of promotion for a bunch of projects that are doing their hackathons. But the biggest thing, it almost turns into like a recruitment rally for developers, if you really want to look at that. It's like the battleground for finding new devs to build apps on your network and encourage them to stay on your network as well. But at the same time, most people aren't even thinking about that. They're kind of like a bunch of nerds going, ooh, wow, I could build an app and make some money or whatever. So usually there's just this hyper competitive atmosphere, while simultaneously everyone's just kind of enamored with all the different technologies being built. One thing that I do hope to stream it. So hopefully you do catch me and David Schwartz in the same room, and maybe we do get a chance to chat for a little bit. But these are almost like developer conventions in crypto. I think the most serious people in crypto come out to these. But not because they're so serious in crypto. These are almost like job fairs. There are people that are very much entrenched in their careers here. Developers, project managers, people who work for different projects. So it's sort of the place to be in terms of being able to network, in terms of being able to recruit, in terms of being able to see what's going on all these different networks. Because you'll get to see a bunch of different projects that otherwise you may not have been exposed to, as well as other projects being exposed to your technology and your project as well. But it's sort of like it's weird. It's like the nerdy version of it's like the developer nerdy Met Gala, but instead of people wearing elaborate clothes, you just see the random dude with Louis Vuitton and Gucci, and then the random developer with a hoodie on, and it's everyone's finding these little roles that are kind of cool. But it's sort of the place to go where at least all the developers are going to be talking about what the next cool things are for the next year. Last year, the big topics were zero knowledge proofs and I think subnets a little bit. I think the year before that was NFTs or stuff like that. So it's always something new. But yeah, it's gonna be cool. It's gonna be cool. That's usually where all the big developers are gonna be there. So it'd be weird if I wasn't.
Yeah, I think they'd be looking for you if they didn't see you show up. But that's just one of the things that shows that you have a very significant role in what's about to, or should I say, what is already transpiring And for anyone that's listening now and or may catch this before ETH Denver, um, yeah, you heard Quincy. If you're a dev and you're looking to network and potentially getting into crypto and start designing some things, then that's going to be your destination. Echo, last question for you, my brother. I know, little man's over there waiting for you. So based on all of your research, gematria, everything that you're unfolding, and I know you can't wrap it all up in a couple of minutes here. Give us something you haven't shared yet. Give us something new.
Oh man. Oh, I mean that can be pretty. That'd be pretty hard because I share everything.
I know you do. I'm just giving you a hard time, man.
No, you're good. You're good. I mean, to be honest with you, you know, I really push forward right now that as much as it might sound like I'm like an anarchist, right? When I'm talking about the financial system and how corrupt the actual system really is. Whenever some of the posts I put up there, whenever I'm explaining to people like really what the feds are and who really controls them and everything, I'm really not. I'm just providing accurate information that's out there, right? You can do your own research. It's just you know. It's going to take us all together to make that ultimate decision, right? Because at the end of the day, just because we have the information out there, until all of us actually band together and sit here and say, "Hey, we actually have a constitution, we have a solution for free energy, right? Thorium. We're not going to be able to transition over to this new world, and that's going to include all of that, right? Changing the money, changing the way we live, changing the way we eat. All of it's going to all combine together." So that's something that I really haven't shared, but that's like my ultimate mission of like what I'm trying to do is trying to empower people and trying to remind people, hey, we live in America. Some people are like, oh, we hate America. A lot of people, especially a few years ago, were like, oh, we hate America. We're gonna move out. I'm like, bro, America's the greatest country in the world. You just have to realize, you probably haven't been in the third world country before, right? My family, we came from Vietnam, right? Our currency collapsed, right? There's a reason why I'm so passionate about teaching people about why you want to not just you want to why precious metals is so important, why the banking system is fragile, right? And it's because of my family's history and everything my grandmother taught me. So that's something if I could share anything, is that one of my main missions and goal right now is trying to like focus people on like, hey, what really the money really is. Because once people start waking up to really what the money is, then they can start being like, okay, well, what the alternative and option and solutions that's out there.
Yeah, and I agree with you. Having been in the financial sector as long as I have, I've had even in sharing some the flyers and things of that nature in relation to our show and things that in that regards, people have reached out. Where can I buy silver? Where can I buy gold? Where can I get this? Where can I get that? And understanding that it's a store of value. Now, having understood, where you're from, having had been a currency collapse, and stating earlier that really the financial system is on toothpicks. I'll put it that way to be nice, right? The financial system is literally almost on toothpicks. So, with that being the case, and it's just like Quincy touched on a minute ago. It could be today, it could be tomorrow, it could be next week. We don't know, but that moment happens. System collapses. And I'll open this up for both of you. What should people do now to understand what that atmosphere, that climate is going to look like once that moment arrives? How should they best prepare to get their homes in order?
I mean, I feel like almost like they're gonna showcase us and let us know like everything, right? They're not just gonna I mean, yes, I feel like on the dark side, like yeah, there will be a collapse, right? It has to kind of happen just to because everything is just too overextended at the moment in time, and you have to expose everything. But everything will come with time. I would say remain calm, right? Remain calm and think with a clear head, and you know, I'm a big believer in Yahweh and God. So put your faith, keep faith, right? Keep if you're finding yourself uncertain, go to scripture and the Bible, and see, read something that can keep you at ease, because everything I feel like that I'm learning right now, and I'm not gonna lie to you, and anybody that's been following me for the past year and a half, I didn't start like this. I didn't start like this at all. I started completely. I'm an XRP Army guy. Let's go. Now I'm like, because of my background and history of my family and stuff, right? It entailed, like, the Christianity side of me. It's kind of like, when I learned about these technologies, and you can go into like the deep rabbit hole. Really, some people say it's like really ancient technology, and like whenever I start reading up on like some of the protocols and stuff, I'm like, hey man, some of this is false suit protocol, or like code that, like, were implanted in us. Because this is one reason why I love gematria so much, is because I believe in codes. I believe everything's is 1 and 0. We're all code. We're all ones and zeros, right? So we're all programmed with with a language, and with like a schedule of our life, right? This is why people believe in gematria, the life path, numerology and stuff. So for me, if whenever you're onboarding into this new atmosphere, it's just you know um remain calm. I feel like that, they're doing their best they can to build everything for everyone, to try to make it as easy as possible. They've been doing it for the past years. I mean, cash is, as much as everybody sits there and says, "Hey, we want to still use cash and whatnot." I'm like, bro, cash. Everybody's going to be using QR codes and debit cards, right? I mean, over in Asia, man, they you don't use a you don't use cash at all. You use a QR code over there for everything. So, once people start, realizing and understanding like technology is not so bad, you be open minded to it, then you won't be left behind. The majority of the people that, I feel like that get left behind, that like, like my mom, she don't really know how to use her smartphone too much, are the ones that were so against, being open minded about using technology. Be open minded, learn about it, right? Yeah, you might make a mistake, but you'll learn from that mistake, right? Hopefully it's not going to be mistakes like I have, where I sent crypto to the wrong wallet, when I first started, but hopefully they'll have phases and put into place to help protect that. But for the most part, I feel like, again, I feel like everything's going to be pretty wonderful in the future.
Awesome, gentlemen. Well, we've crossed about the 2.5 hour mark, so I'm going to go ahead and wrap it up. But I do greatly respect both of you. I honor both of you, and again, I thank you and your families for carving out the time to come and share some information with my audience. To say again that we know in what's unfolding. Last I checked, I think it was like 3 to 5% of the world's pop is in crypto. Out of what, 8 billion plus people. So we understand that there's going to be a lot of people that need to be educated. There's going to be a lot of people that need to get brought up to speed. And then even touching on what you just said, Echo, with the new U.S. Treasury notes coming out, most people don't even know that we're the world, not just us, is about to go through the transition of now going back to an asset-backed currency, which is literally going to devalue the money we have now. And see, this just hit me. I got to ask you one more thing, Echo, before we wrap up. U.S. debt clock.
Mm-hmm.
M2 money conversion to U.S. Treasury dollars. It shows 1,700 some odd dollars to one new dollar. Is that is that potentially the conversion rate that will happen from the M2 money to the new money?
That's what it looks like it's showing on there. It's not 100%. I mean, I've seen it fluctuate, where not fluctuate bad. It's been like, I've seen it be at 1776 before, right? But then I saw the other day, somebody sent it over to me, a screenshot where it was like 134,000 to one treasury dollar. And I was just like, it freaked me out. It was just 2 nights ago, whenever the debt clock update, and I was just like, that's insane. That's way too much. I was like, unless, again, they're just super future printing the money, right? But I don't know what their plans are. I really don't. All I know, like that actual plan of like conversion, all I know is that, hey, we are going into new money. What that price is going to be, it remains to be seen. We have, again, we don't have that many solutions on the table. You either let the thing collapse and let it be like the Roman days and just go up in flames, or we just upgrade the system. There's no, I feel like there's no in between. You've already exhausted all options to delay kicking the can down the road. You continue to kick the can down the road, you were literally, it's not going to end well. Where on the other side, it's just like, hey, we just go into something brand new. And if it does turn into a being that $1,774 dollar M2 US dollar into new treasury dollar, then I feel like that would work, because at the same time too, if we upgrade the system, I'm envisioning it like, if we asset back everything, then we can actually help combat inflation on the back end too, right? So that's how I'm envisioning it, how they can get inflation down, because the race is also, if we're printing this much money, how do we outpace and beat inflation on the other end, right? You're trying to balance it out accordingly. And how I'm envisioning is that, hey, we are able to just go ahead and just say, okay, well, we're going to reevaluate everything, bring everything to a level playing field, right? Because that's what everybody wants to be on. Then possibly that might, combat inflation overall. But then overall, all the countries will actually get their own separate, like, being able to trade, pay, however they want to, without having the intermediary in the middle. So, the U.S. debt clock does tell a lot. I tell everybody, because I get mocked for it all the time. Covering the U.S. debt clock, they're over here like, "Oh, you're over here, decoding secret images and stuff like that." But I'm like, you want to know what? I only know 3 people like that I talk to, like, on that actually cover the U.S. debt clock and actually are putting out educational information about what entails into it. And I mean, it's getting dark now. I mean, we're talking about we're talking about the overlord now on the most recent debt clock. So this thing getting deep. But for the most part, I mean, it does. Hopefully, people start waking up to the fact that, hey, the U.S. debt clock is more than just all these fancy little numbers, because these are all just codes and API numbers that are extracted from everywhere else, plugged into a gigantic ass spreadsheet, and being able to calculate it for us to tell us, hey, this is where our problem is. Let's fix this problem, right? It's highlighted red for a reason. Let's fix this problem so that it's not red no more. It's green. But unfortunately, people aren't attracted to white and black.
Yeah. While you were speaking, and I was just pulling it up as a point of reference here. Let me get it pulled up, then I can share my screen. Where am I at? There we go. So I just, and this is where that question literally just popped in my head, because we're all familiar with Coach JV, and he's been, he's always stated, and it's things that I've learned in school as well, where come on, get up there. There we go. All right. So for those who aren't familiar, this is the U.S. debt clock. So, um, and what the question that I was posing to Echo, and also touching and referencing on what Coach JV usually mentions as well, is that once all of this really starts to play out, it's going to wipe out the middle class. And what he's saying. See, I didn't even get into the new debt clock message, but the secret window. I'll save that for you, Echo. But what I was looking at here is in the bottom right corner. Can you guys see that?
Yeah.
Okay, so what I'm referencing is this portion here.
Yeah, you can click on the top right, and it will the box will go away, all the secret image, and it'll open up everything. Like, you scroll up all the way to the top, it says close and open. Yeah.
There we go. Thank you, sir. All right, so if we look down here, M2 to USA money ratio now. So 1,774 of the M2 money to the new money, right? So if this conversion maps out exactly as it's saying, which we don't know that for certain, but someone that has $2,000 in their account ultimately in transitioning that money to the new gold backed money for $1. So in essence, they're going to be losing about 1,770 whatever dollars. How important is it for people to really wake up and begin to understand what's happening before their eyes? I'll pose that to both of you, and then we'll once we get this done, we'll wrap it up, call it the night. Um, if you guys haven't had an opportunity, you can follow Echo and both Quincy. Quincy's handle on X is at Coin Club Quincy. So you'll have the ability to follow both of them. Please plug into them, especially if you are not aware of what's happening right before your eyes in this new technology, this new infrastructure that's being built and being discussed, and you have no idea what it is. Please connect to both of them for further insight and clarity as they produce their content. And as you see, both of them are very open and welcoming to answering your questions and engaging you. So I just honor both of them tonight. But that last question, what do you guys think?
Reiterate again. Sorry, I almost forgot
If
it.
if and just showing what the U.S. debt clock shows, I think it was at 1,776 to M2 money to the new money, which would be $1 of the gold backed money, which will, in essence, as Coach JV says, would wipe out the middle class. That most people live in paycheck to paycheck, right? And most people don't even have $500 in their account. So with a big if that is the actual conversion rate, how and understanding what's evolving, unfolding, and being revealed to people right in front of their eyes, right under their noses, and they're not even aware of it. Um, what can we encourage them to do to at least open their eyes partially to start engaging in this before it's too late? Because we don't want another um, situation like you stated, Quincy, where most people scoffed at the automobile, most people scoffed at the internet. Most people scoffed. Some people are still scoffing at Zelle and Cash App and even the instant payment apps. Now they're like, whatever, right? Crypto, it's a fad. Blockchain, to go away, right? So that they don't miss an opportunity that's in front of them, because I think for the most part we all know that this is going to be the one shot we potentially have in our lifetime to make any form of instant significant impact, just by researching, having patience, and allowing things to take their natural course. What would you encourage people to do from now on so that they can best put themselves in a position to learn, understand, and to also protect the things that they've worked their entire lives for?
Kind of in a general sense, stay curious. I think a lot of people become very content with how things are and don't necessarily dive into new things. And I think if you're curious, you'll find reasons to, well, not find reasons, but you'll find ways to be able to take into account your worries. Where if you were not curious, you may never even consider them. And that's the simplest way I could put it without going on like a million mile an hour word rant.
What about you, Echo?
Yeah, stay curious, but be optimistic, right? The reason why I say optimistic is because there's a lot of hidden information from us, and when the time comes, they're going to expose it. And I think a lot of people are going to be shocked. I can't sit here and say exactly what it is because you got to go down the rabbit hole. But I think that once everything gets revealed, it's going to be a lot more optimistic than what people are saying. When, yes, it could wipe out the middle class. I'm not saying it can't, but more so like, hey, you know, there's a lot of hidden information out there, and I think that once the veil has been lifted, you'll see like, hey, this was the plan all along. We just had to make it to the end. Now you're gonna get to enjoy the new world. So yeah. Also, know what you hold.
Know what you hold, and I definitely do understand that. Thanks to these two gentlemen right here. Again, I want to thank you both for the amount of time that you spent with us tonight. Definitely, you have an open door. Echo, every time you're on, I don't usually always post, but I usually have an earpiece in and I'm listening when you're on TikTok lives. And same thing with Quincy. If I see Quincy jump on, I usually put an earpiece in and take a listen if I don't have the time to actually sit there and actually watch watch the collaboration myself. But I honor you both. I thank you both for the amount of time that you have given to us tonight. I hope that everyone in both of your communities continue to stay blessed, stay optimistic as Echo said, and stay curious as Quincy said. In a good way, though, right, Quincy?
Yeah, in a good way.
All right, gentlemen. Hey, love you guys, man. Again, we're gonna go ahead and close out the quick coach session for tonight. I know there's a ton of questions and things of that nature, so I'll definitely look to have both of you guys back on as well. Hopefully in the future when we do it. I know we didn't have a lot of time before this session, but as these questions and things are coming through and I have a ton of them, I can kind of preface those and get that information over to you guys as well, so you kind of know what to expect. But I do appreciate your flexibility and in being here tonight.
Thank you so much for having me.
Yeah, absolutely. Thank you very much.
You both are welcome. All right, everybody, we're going to go ahead and call it the night, and we're going to shut everything down. Whew, I should get something to drink there. My throat's getting a little dry. But we'd like to thank EchoDaTruth. Again, he's primarily on TikTok, but he is transitioning over to X. So again, you can follow him. His handle is there. Also, Quincy is the lead Solidity developer for the XDC Foundation. For those that don't know about XDC, pull up that white paper, take a look. You know, the new infrastructure for what we believe is coming as the new financial system is already being laid in front of you. And most of you don't even know about it, but you can follow Quincy on X at Coin Club Quincy.
Yep.
And he's usually him and Echo are usually on pretty regularly, so that way you can get your cut your learning curve, get the information you need so that you can begin to make the best decisions and determinations for your family and your households. I'm Dan Alford. You guys know me as Chosen Words. I wish nothing but the best to each and every one of you. We're going to go ahead and call it the night, gentlemen. It was amazing.
It was awesome. It was awesome.
It was great. Appreciate it. Look forward to the next one.
Absolutely. I'm looking forward to it as well. And they got my there it is. I got my chat up here. So I'm going to go ahead and close everything out, gentlemen. I'll be in contact with you guys soon, and we will all chop it up. Echo, I'm kind of scared because I know where you are, but I know Aquaman's down a real big rabbit hole right now. I'm gonna wait until he gets to Wonderland before I pull him up to have any form of conversation. So I'm gonna let him play around in there for a little bit.
Got you.